I'm ready to be live. In 4, 3, 2, 1, and we're live. Yay! And people are actually here. Wonderful, wonderful, wonderful. Wow. Good evening, ladies and gentlemen. This is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, take you along for the ride for that safe, predictable 1% per week. Hey, 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 Jessica King's here, Jeff Ryan's here, and Sheila. How you doing there, Miss Sheila? Wow, all you guys saying hi to all you guys. Neil, how's it going? Obid, how are you? Getting ready to roll. Dennis is here. Whoa. I'm Brandon. Cool big A person's here. Hello. You know what? A person, I didn't get a chance to come on over to YouTube today and do anything. I had a couple of questions. People were wondering how I came up with the math for the rate of return. So I was doing that all day today. GD, good evening there. Alrighty. Well, let's just get started, jump on, and it is the 25th of July. Tomorrow is officially, I believe it's the last trading day of July. Can that really be true? Nope, it's not. Tomorrow ends week 30 for the week. Could we connect sometime? Yes, we can. Just give me a few. Mark, how's it going? I text you my number on TikTok. Well, if you text me your number on TikTok, most likely I'll give you a call. Make sure you send this to the right person, though, because there's a lot of people pretending to be me on TikTok. Dennis, how's it going? All right. So we have a week and a half before the month is over. So tomorrow is the end of week number 30. Okay? Tomorrow ends week number 30. Monday brings week number 31. Whoa. All right. All that being said, so as I was saying earlier, I was re-going over some of the numbers in my on my website, and yeah, some of them were wrong. I forgot to add in some of the dividends, and I also forgot to add in some of the differences between the purchase price and the strike price. Sometimes it was higher, sometimes it was lower. So I'm going over the math again, and yeah, it's still freaking unbelievable, but it is what it is. We are here. My Siri covered call got exercise today. Now I could do another contract. Which stock though? Yeah, it's always a tough one because there's always an opportunity to do something. There's always a good company right around the corner. Phillips 66, isn't that PSX? Let's check it out. See if my thinking is correct. PSX. I was right. Imagine that. 142.51 for PSX. How can you tell when your option gets exercised notification? Yeah, you'll get a notification. All right. So PSX, always, always, always. First thing I want to take a look at really quick, the high, the low, where was it, where is it, what direction is it going? Okay, great. After that, I want to take a look at the numbers. What are the numbers telling me? Well, if I'm buying it at 143.90, I'm looking at the 144s. The 144s are going for 220. Now, that's well over 1%. Now, I'm looking for a safe, predictable, consistent 1% per week. Phillips 66 is giving me that 1% per week. Okay, great. So let's take a look at the numbers. Now, just because these numbers right here on this side, this is the option chain. See, up top is the stocks. Now, there's two different scenarios here. One is the stock price, and one is the option price. Now, I like to do the covered call because a covered call is one of the safest trading strategies there is. You buy the stock, you sell somebody the right to buy it from you for basically the exact same price you paid for it. All right. So, first thing I want to take a look at after I figured out the numbers is over 1%. Great. I want to see where was it a year ago? 106.88. And that was actually the bottom of the year. 105.27 was the bottom of the year, and that was a year ago. The top of the year was 174.52, and that was the beginning of April. But from the beginning of April, she just keeps going down, 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 down. Here's our 30-day bottom right here. Let's take a look at the last 30 days. For that, we want to go back to 625. There it is right there. So that's a month ago, 625. A month ago, we opened up at 138.36. Great. She jumps up. It looks like we have a triple high. Take a look at this. This is what you call resistance. Okay? Now, you'll hear certain terms. You'll hear them over and over again. One is support. One is resistance. Support is usually the bottom where it doesn't go below. You can't really tell it here. Okay? You really can't tell it on this chart here. But you can see the resistance where it doesn't seem to go past. It just doesn't seem to go higher than 143.12. Okay, it hits it on the 2nd of April. Sorry, the 2nd of July. Sorry, 2nd of July. It hits it again the 17th of July, and then hits it a third time on the 25th of July. So this is your 30-day chart. It hits 143 three times, and it just wouldn't go to 133.50 or 134. Okay, 143. Sorry. But take a look. 30 days ago, she jumps up, drops down, finds the bottom on the 9th of July, shoots back up, hitting that 143 again for the second time this month, drops back down to 135.97, like 136. Not full screen on TikTok, can't read the numbers. Yeah, I'm aware of that. That's why this screen here behind me, the screen behind me is live on YouTube. So open it up on your YouTube, either on your big screen TV at home or on your computer. If you're on your phone or your iPad, you're not going to be able to see these numbers. And I'm terribly sorry about that. I just have no idea how to make it simple for that without adding a cameraman in here to zoom in to what I'm pointing at. Why does it say simulated trading? Well, it says simulated trading because I have simulated trading account as well as a regular account. Actually, I have 6 different accounts. Okay, this is a regular account. This is a regular account. This is a simulated account. So the simulated account is what I share with everybody. It makes it easier for me. I do a lot of practicing with this particular account. So, like I say, I have 6 different accounts. This is one of them. This allows me to share with people different trading strategies without winning or losing any money, but I do have my regular trading accounts also. Okay, so I hope that answers that question. We won't have to worry about that again. Now, I do suggest if you're trading, you have a simulated trading account because you need to practice until you get good. I've been doing this for over 20 years. I still have a simulated account. I do. And I still make mistakes. Okay? So, that's what it's there for. It's there for you to make mistakes. Because if you do something on here and it goes the wrong way or you hit the wrong button, yeah, well, you're screwed. You lose money. Here, on my regular trading accounts, I'm a little bit more leery and I go a little bit slower to make sure that I don't make any mistakes. So I'm kind of hoping that, you don't really keep asking that same question because the numbers are the numbers, whether it's a real account or a simulated account. What do you think of people who only talk about fair value gaps on lives and just sell BS courses? Well, Nate, you're relatively new here. I really don't have a course to sell you. I do have a live trading class that actually meets every morning, Monday, Tuesday, Wednesday, Thursday. And yeah, you do have to pay for that in order to be part of that. Yeah, I get that. I don't have a BS course to sell you. I'm just sitting here giving out information. And I have taken, Nate, I have taken a look at a lot of those trading strategies. Some of them weren't great. Some of them are a little complicated. This one here was created for a 9-year-old. All right? It had to be simple. It had to be safe. It had to be predictable, consistent, and no way to lose. Now, when I say no way to lose, it was created for my 9-year-old daughter back in 2008. So at 9 years old, she doesn't know everything that I know, so I had to keep it simple. I signed up last week, haven't received any email with the calendar and stock list. All right, Copilot, if you signed up on Patreon, it should be in my account, which means you should have received a text message this morning for the morning call. I don't remember seeing you there. And the stock list gets sent out on the weekend. Okay, every stock, every week. We only look at 1 week at a time. There's no sense in sending you all 300 when we're only going to look at 5 or 10. Okay, so I've said before many times, the way I do my trading is I find some decent stocks. Hold on, I'm getting this video up going. Go back. And there we go. No, I don't want a damn freaking photo, you wiener. There we go. All right. Now, when I tell people that I only trade based on the calendar, sending you a whole list is kind of pointless, because when I'm looking at a week, let's say I'm looking at this week right here. I'm looking at Siri, Louisiana Railroad, Visa, Apple, Jeffries, and UPS, because they have their dividend coming up. Now, when it says dividend investing for weekly cash flow, what do you think that means? Well, I use dividend stocks to let me know when to buy a stock. Okay, so the dividend stocks have a tendency to go up in value just before the EX date. Each one of these little green dots represents an EX date. There's 4 dates to remember. Okay, first is the announcement date. Okay, dividend announcement date. See it right here? You get my cursor right there. Okay, the second date, which is the most important one in my humble opinion, is the EX dividend date. See it right here? EX dividend date. That tells me what stock is paying the dividend on that date. It is the last day the stock trades before the dividend is paid out. So if you want to capture the dividend of either Chevron or Moody's, because those are 2 I have highlighted right there, Chevron and Moody's, you've got to buy it before the 17th. Well, you can buy it the 16th, the 15th, the 9th, the 3rd, the 1st, any day before the EX date. The EX date is the last day the stock trades before the dividend's paid out. Plain and simple. Third date is the date of record. See it right there? Date of record. That means whoever owns the stock on that date is entitled to the dividend. Nobody else. Whoever owns it on that date. And of course, the 4th date is the payment date, when you're actually going to receive your money. It's all pretty simple. 4 dates to remember. Now, we check every week or so to see how many stocks there are available in the stock market. Now, when we checked earlier this week, there was 9,598, I believe, something like that. Excuse me. I should not have had those enchiladas for dinner. Oh my God, they were good, but gas. As I was saying, as I was saying, what the hell was I saying? Oh yeah, there's 9,596 or 98, some weird number, but a huge amount of stocks, like 9,700 stocks to pick from any day. I'm Italian. I'm looking at the camera, see my hands moving. I was like, holy shit. All right, anyway, so 9,700 stocks to pick from any day. Any day of the week, you can buy 9,596, something like that. Weird number. But anyway, out of all those companies, you're going to notice there are 2 groups. Group 1 will take all the profits and put it back into the company for capital growth. Okay, great. That ain't for me. I'm not looking for capital growth. I'm looking for cash flow. So the other half of that 9,600 companies, they will take their profits and they will share them with the investors. And that's you and me. You start buying stocks and selling stocks, you become an investor, you become a shareholder. You are entitled to a portion of the profits, and that portion of the profits is a dividend. Okay? A dividend, when it increases every year, basically means the company's consistently profitable. Great. So I look at companies that have 20 years or more of increased dividends. What does that mean? That means for 20 years they're profitable and they get more and more and more profits every single year. So if they're increasing their dividend every single year, that means they're doing something right, in my humble opinion, and that's the only companies I want to invest my money in. So you take all those 300 companies. Let me quickly give you a list. Ready? Hope you got a pencil and piece of paper. Crayon, mascara, lipstick, write it on the mirror, write it on the wall. Really don't care. Okay? Dividend Kings, 54 companies that have increased for 5 decades or more. That's 50 years of increased dividends. Dividend Aristocrats, 25 years of increased dividends. I believe there's 67 of those. And then the Dividend Champions, 150 companies, all have increased their dividends for 25 years or more. And then we got the Dividend Contenders, 10 years to 24 years of increased dividends. Between those 4 lists, right, 5 lists. Wait a minute, 4 lists. The 5th list would be Warren Buffett's list. So between those 5 lists, that's well over 300 companies that you can choose from, all having more than 20 years of increased dividends. Great. Those are the only ones I want to look at. You take those companies and you stick them into a calendar according to when they pay their dividend. Now, most companies, not all, but most companies pay a dividend every 90 days. So you got January, February, March. That's the first quarter. April, May, June. That's the second quarter. July, August, September, third quarter. October, November, December, fourth quarter. Okay, first quarter looks exactly the same as the second quarter, which looks exactly the same as the third quarter, which looks exactly the same as the fourth quarter. Okay, if we're looking at Kroger right here, Kroger is on the 14th. Let's go to 2024. Okay. Kroger, right here on the 15th. You'll notice they're not all posted because they don't all post right away because we're not even in August yet. All right, so some of them won't post for a couple more weeks. But let's go back to July because we already passed all Julys. Okay, let's look at MasterCard. Okay, MasterCard right here. Second week of the third quarter. We're in the third quarter now. This is July. Week number 1, week number 2, week number 3, week number 4, week number 5. Week 2 of the third quarter. Well, let's jump back and look at week 2 of the second quarter. That would be April. Oh, look at that. MasterCard. Second week of the second quarter. Now, if you go back even further to January, oh, look at that. Second week of the first quarter. Okay, it says January 2024. Second week of the first quarter, there's MasterCard. Right next to it, Verizon. Okay, April, same thing. April 2024, the MasterCard, Verizon. And where are we now? We're in July. July. Look at that. MasterCard, Verizon. Second week of the quarter. First quarter, second quarter, third quarter, fourth quarter. You're going to see MasterCard and Verizon right next to each other. So in 90 days, we're going to look at MasterCard and Verizon again. Until then, I really don't want to look at them. There's no point because they've already, see, we're into the 25th right here. They've already paid their dividend. They're not going to pay their dividend for another 80 days or so. So why the hell would I want to look at them? Stocks go up just before the dividend. So here's MasterCard, here's Verizon. Okay, the 9th and the 10th. Just for the fun of it, let's go take a look at the chart. Okay, Verizon, VZ. Now we said the 10th, right? July 10th. Okay, Verizon, check it out. July 10th, right there. Has a tendency to go up before the dividend. Oh, actually, we go back to the first of the month, wouldn't we? Right, there's the 10th there. So 10 days before, we 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, right there. Okay, so from there, did she jump up? Yes, she did. Okay, MasterCard's going to be the same thing. Just the beginning of July. Here we go. Beginning of July, July 10th. Where is it? Just there's July 10th right there. So beginning of July, yep, she went up just before the dividend. Always have a tendency to go up just before the dividend. That's why I buy them just 2 weeks before the EX date. Okay, here's all the EX dates. So MasterCard and Verizon, I would like to jump into that. Ooh. The 24th of June. Okay, 2 weeks before on a Monday. The 24th of June is when I wanted to jump in. So what's the 24th of June look like? 24th of June. Okay, the opening of the day. She opened up at 1914. She jumped up nicely. I would have made my 1%. That's what I'm looking for. I'm looking for a safe, predictable, consistent 1% every single week. And if I go by my calendar, if I go by my calendar, come on, right there. If I go by my calendar and only use the calendar to pick what stocks I'm looking at, now this is just one list I have. Matter of fact, this is Warren Buffett's list. MasterCard, Verizon, Procter & Gamble, American Express, Bristol Myers Squibb, Globe Life, AbbVie, Bank Mellon, so on and so forth, Procter & Gamble. You probably heard of all those companies. Now, for the most part, when it's Warren Buffett's list, I don't second guess it. It's always, yeah, oh sure, why not? It's good enough for Warren, it's good enough for me. Why not? Okay, so I have other lists. Okay, so now I have a list of companies that are about 100 years old. Okay, now, Pfizer, Procter & Gamble, Lowe's, Kimberly-Clark, Caterpillar, Bank Mellon, Hormel, Abbott Labs, MasterCard, Visa, AT&T, Cardinal Health. These are all good companies. I have no problem whatsoever buying any of them and holding on to them. So, I don't think I covered it yet. So let me cover it really quick. Now, we got enough people here so we can do the disclaimers. So I keep myself getting in trouble. Disclaimers, here we go. I'm not an accountant. I'm not an advisor. I'm not a financial planner. I'm basically nothing. The only numbers and names and letters I have after my name is SR because I'm senior, my son is a junior. That's it. I have no training in this whatsoever. I'm just some poor schmuck that got paid. Somebody threw a lot of money at me and I had to figure out what the hell to do with it. Okay, I had a manufacturing company. I made something that nobody else made. Made a lot of money. Great. People could throw money at me. What the hell do I do with it? Well, I tried a lot of things and I found that the stock market is the simplest and easiest. Okay, I don't need a location. I don't need any overhead. I don't need any employees. I don't need any inventory. And I can do it anywhere in the world as long as I have an internet signal. Okay, so I thought it was like the perfect business. I can come and go anywhere I want. I learned a lot. Okay, I made a lot of mistakes. If you make a mistake once and it hurts enough, yeah, you never make it again. All right, so that being said, be leery. There's 27, last time I counted, 27 scammers pretending to be me. So if you get a text, a DM, a message, whatever, saying that it's me and I have a great deal for you, more than likely it's not me, okay? I don't operate that way. If you really want to contact me, I tell you to send me your phone number. I will give you a call. Okay? I don't take money from people unless you're right there in front of me. I can look in your eye, shake your hand. That's the only way I do it. Sorry. Okay? If you got someone that says, hey, I got a great deal for you, send me a couple bucks and I'll do this for you. Yeah, that ain't me. And I do call people. I call people every day. Send me your number. I'll give you a call. See if you can prove me wrong. Anyway. So, that's the disclaimers. This is basically for entertainment whatsoever. Anything I say, disregard it. Do your own research. We're all adults here. You are 100% responsible for anything you do. Please do not pass the buck on to me. I don't give advice. I don't tell people what to do. I tell people what I'm doing. That's all I'm doing. I'm sharing what I'm doing, and I'm basically documenting this for my grandson, who's only 4 years old at the moment. So when he comes time, of age and he can inherit the company because my children have no interest in money whatsoever. Weird. Can't figure it out. So I'm documenting this for my grandson. So if you think there's an alternative reason, yes. Okay, I want my grandchildren to be able to see how their grandfather earned his money and how his grandfather built the empire that I'm just getting started on building. Okay, so you guys are here witnessing the pouring of the foundation, so to speak, and you get to take advantage of what it is I'm departing. All right, that being said, that we know I don't give advice, I don't make recommendations, and I do only speak in Spanish. Sorry, no, I don't speak in Spanish. My Spanish is very, very limited. Okay, English or Spanish? Okay, if I had someone that could interpret in Spanish, fine. I'd have someone do it for me, but I don't. Okay? First one to move or talk is gay. Starting now. Well, alrighty then. Gay usually means happy. I'm a happy fellow. So you got to come up with your acronyms or your what do you call it? So Parkis is here. How's it going? So let me go through some of these questions first. Yeah, no, this definitely ain't the LGBTQ, whatever the freak that crap is. Don't get me started on that. Oh, I haven't gone over how I came up. There we go. There we are, right here. All these questions. E.T. E.T. Hey, Doc is here. How's it going, Doc? E.T. Isn't that extraterrestrial? Energy transfer. E.T. Let's take again. Ooh, that's kind of high, isn't it? Okay, now, it makes me a little uncomfortable. It makes me a little uncomfortable to see how high it is at the moment. Because I don't like playing the high game, you know, because I don't buy high and wait for it to go higher. That's just not something I do, all right? So I personally wouldn't do ET because it's just a little too high for me. All right, but if you do like ET, let's see what it looks like. Currently at $16.17. So the 16 itself is going for 24 cents. But if you buy it, you're losing 17 cents right off the top. So that 17 cents has got to come from somewhere. So you take it off of the 24. And what does that leave you with? It leaves you with not enough money because you take 7 off of that and that brings you down to 17. Then you take 10 off of that, that gives you to 7. Yeah. Sorry, energy transfer is no for 2 reasons. One, I'm not getting my 1% here, and it's at a high. So I'm going to say no to that one. Sorry. All right, what else we got? Daniel Rico, thanks for fixing your screen. Now I can follow back. So, all that being said, let's keep on moving. All right. Tonight on YouTube board, not full screen, has 1/3 screen, maybe better tomorrow. Well, let's take a look at why we're having that issue with YouTube. All right, let's get rid of that. And let's try it again. Display capture. Okay, alrighty, that works. All right, so hypothetically speaking, does that work? Is that better? Someone want to check on YouTube, see if that works? Reggie Joe Bo Jackson, James, what the hell were you thinking? I don't know, what was I thinking about what? You got to come up with something better than that. Which stock I can start? Decast, I honestly can't tell you where to start, other than keep coming back and keep learning what you think you need to know in order for you to feel comfortable with taking control of your own money. I have no idea who you are. I have no idea what you want to do. I have no idea what your risk parameters are. There's a long list of information that I need in order to give you any advice. I don't have any of that, so I can't give you any advice. Sorry. But the question you should be asking yourself, does it make sense? That's it. Does it make sense? Do I like energy transfer? Do I like energy transfer at this price? Well, I don't like it. And the only reason I don't like it, don't get me wrong, I like Energy Transfer, just not this week. Because this week, the numbers aren't giving me what I'm looking for, and it's too close to the high for me. Alrighty? So, no to Energy Transfer. Focus on S&P and you're good. Asset work, I'm going to disagree with you. Only because S&P doesn't give out dividends. So when it goes down, what are you bringing in? Now, the reason why I like dividend stocks, number one, is they are consistently profitable. Okay? If they're consistently profitable, well, great. That's who I want to give my money to. Why would I invest my money in a company that's not doing what they should be doing, which is continuously increasing, continuously getting better, and continuously making more money? Well, isn't that the reason to be in business in the first place? Nobody goes into business to go broke. They go into business to make more money, and then they grow, and then grow, and then grow. When you stop growing, well, what the hell are you going to do then? Well, I really don't know. So I like to stick with companies that have consistently increased their dividends, and that means they're consistently profitable. That's it. All right, S&P, sorry, they don't have any dividends to offer me, and if the S&P goes down, what am I collecting? Nothing. Okay, if ET goes down, Energy Transfer, if they go down, well, at least I'm collecting the dividend. What stock can I steal, not borrow, to practice with on a paper account? Dennis, I would just follow along and see if what I'm saying makes sense. Okay, if you like Energy Transfer, give it a try. You never know. There's Procter & Gamble. There's Home Depot. There's Lowe's. There's International Paper. There's IBM. There's tons and tons and tons of stocks that you can just practice with. Okay, I like starting out. Start out with the Dividend Kings. Okay, go to Google and download Dividend Kings List 2024. Okay, it's 54 companies that have increased for 5 decades. Okay, then you take a look at the aristocrats. Disney. Somebody wants to take a look at Disney. I've been in ET since 2019. Love the growth, but the taxes are weird. Well, Colt, here's an interesting thought for you. All right? Just an interesting thought, Colt. Now, a lot of people buy stocks and into them for years, decades even. Now, hey, I bought a stock 30 years ago. It's still, it is what it is. Okay? But look, here's the thing. Last August, this thing was at the bottom at $12.49. All right? From $12.49, she jumped up to $16, $16.50. Great. So here's a question for you, Colt. At what point do you take your profits and say, thank you very much, it was a fun ride, and move on? I can't see it. Okay, if I buy a stock, even if I buy it at 13, it jumps up to 16. From 13 to 16, that's a $3 increase. A $3 increase on a $13 stock, that's just a smidge below 25%. Okay, well, fine. Take your profit and run, because it's not a profit until you take it, Colt. Okay, I have no idea what you bought it for back in 2019. For all I know, it could have been 30 or 40 bucks. How am I supposed to know? It's not a stock I follow that often, because the numbers just don't work for me all the time. Tom, you want to look at Disney, huh? DIS. First thing I want to take a quick look at, the high, the low, where was it, where is it, blah, blah, blah. It's fine where it is, but look at the price where I can buy it. The price that I can buy it for tomorrow morning is $89.30. The closest strike price is going to be the 89, which is $1.49. You take the 30 cents off that you're going to lose. I'm still walking away with $1.19. $1.19 on an $89 stock is more than 1%. Great, that number works fine. So let's take a look at the chart. The chart's going to tell me when is a good time to jump in. Okay, so the numbers over here, what's my rate of return? Well, that's working. That's getting me more than 1%. That's what I'm looking for. But what is the chart telling me? It's telling me something different. The highs here, I got a double high at 123.84, and that was the beginning of April. She bottomed out at the beginning of October of last year, 78.63. Now a year ago, we're at 85.94. Dropped in October, shot up in April at 123.55, and she's been a downturn ever since. Keeps on going down, 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 down. Look where we are the last couple of weeks. Now, I really want to take a look at 625. 625, here it is right here. 625. All right, that is 30 days ago. This is what you call the extreme. 30 days ago, we're at the 30-day high. Today, we're at the 30-day bottom. Well, what do you think is going to happen? We're going to keep searching for that 30-day bottom until it shows up. Well, when does it show up? It could be today. We don't know. Now, we looked at it yesterday. I remember distinctly we looked at it yesterday because I like the drop. Okay, I like a drop here when you're down at the bottom because you're making your money in the stock market when you buy low and sell high. Okay, Disney is at a 30-day bottom. You can't get any lower than a 30-day bottom, especially the way that I trade. I trade on a 5-day pattern. I jump in on a Monday, I'm hopefully out on a Friday. So this looks awesome to me. So I'm going to put Disney down for next week because I want to find that bottom, and when I do, I want to jump in and take advantage of it. I didn't have my book with me last night, but I got it tonight. D-I-S. All right, there we go. So I got Disney for next week to see where the 30-day bottom is. And I'm hoping the numbers are still going to work next week when we do isolate that 30-day bottom. Because once we identify it, great. Perfect time to jump in. It's Disney. It's been around for almost 100 years. All right? Almost 100 years. She's in a down pattern. Once she finds the bottom, what happens then? She turns around and goes back up. Great. This is the first time it's ever happened to Disney? No. It's done it before. She dropped, and then she turned around and goes back up again. That's what stocks do. They go down, they go up. They go down, they go up. But Colt, seriously. Okay, ET, if you like it, great. But it's becoming a dust collector. If you don't sell, you're just collecting dust. What's the difference? What's the distance you look at, you look out? 90, 60, 30. Oh, a billion. I look at the 1-year chart first. Okay, I want to see the high is for the year. I want to see the low is for the year. I want to see which direction it's currently going. Okay, great. Then I jump to the 90-day. Then I go to the 30-day. Because the 90-day will give me a pattern. Okay, let's go take a look at this one. Here's the 1-year chart. Okay, a year ago we were over here. Here's our high there, and here's the low there. Okay, very first thing I want to see, the high, the low, where was it, where is it, and what direction is it going? Great. Okay, the low is down here in the 80s, and the high is way up there. Currently we're 89. Okay, I don't mind. Last 90 days. All right. That's about 90 days. I've run up the whole 90 days. 425. Here we go. Okay, this is the complete 90 days. Now, what are we looking at? Well, first, high, low, where was it, where is it, where it's going. Okay, we can see that it's going down. But what am I looking at on the 90-day time frame? I'm looking for the patterns. See, we got the high way up there. She comes down, up, down, up, down, up, down. Look at the spacing between the highs and the lows. 5, 6 days, 5, 6 days, 5 days, 6 days, 5 days, 8 days. And then you just look for patterns. It's not a quick 1, 2, and then up and down. No, no. This is like a week and a half between the highs and the lows. Between a week and a half. So it gives me an idea of what the investors, that's you and me, what we're thinking. Great. Now, let's use that same line of thinking and take a look at the 30-day. Well, the 30-day, 30 days ago was at the 30-day high. Okay, today's the 30-day bottom. What have we been thinking? Okay, high, low, high, low. Right now, it's at a low. As soon as it finds the bottom, it will turn around and go back up to the upside. What about VXY? Holy cow, what the hell is VXY? Now, you can probably tell by my tone of voice, I have no idea what the hell VXY is. So if I have no idea with it, usually we all know that's going to be a No, right? Usually. Okay, VXY, $12.30. Okay, Polar shares, short-term futures, yeah. It just sounds wrong. VX. Oh, VIXY. VIXY. Okay, Pro Shares ETF. Yield 0. What the hell are you thinking? A 0% yield? Why the hell would you put your money into something with a 0% yield? Do you even look at what you buy? Seriously. All right. Let's look at historical data. Historical data, dividends only. Oh, really? 0% yield and no dividends. Why the hell are we looking at this? Seriously. We got a lot of people here that want to look at dividend investing for weekly cash flow. You're giving me a company that has 0% yield and no dividends. What? I wish there was a way I could block you, because I have no idea what the hell you're thinking, dude. Seriously. All right, CrowdStrike messed up my Friday, but my buys went through full less. So win, okay. Billion, he likes 2 weeks before dividend, correct. Colt, and paying 2K taxes on ET. I have no idea what that means. Please review JCI. RG, you really want me to do JCI? So ask yourself a question. Do they have 28%? What option level are you required to have with a broker to your strategy? Okay, the simplest is just buying stock. You don't need a level. But to covered calls, you need at least level 2 covered calls. All right? Got a lot of videos I'm pumping out on this thing over here. I'm starting a new channel called The 10-Minute Trader over on TikTok, and see how well that's going. There's going to be a couple of different trading strategies over there. Okay, and start. There we go. So, VIXY, really, you really want me to take a look at that? Yeah, that's going to be a no. I don't even want to bother with that one. So what, JCI? Oh my goodness, JCI. I've never heard of them. Okay, it's a monthly, it's a no. Sorry, RG, no. When I say no to monthlies, the reason why I say no to monthlies, see this, 16 August, 20 September, 18 October, 17 January. I can only do a covered call once a month. That's only 12 times a year. So if I'm lucky, I get 1 or 2%. Great. 1 or 2%, 12 times, that's only 12 to 24%. If you're okay with that, fine. But then you have to guess, where is it going to be in 4 weeks? I have a hard enough time trying to figure out where it's going to be in 5 days. Good luck with that one. Right here, here's where Johnson Control is right now. All right, she goes up, she goes down, she goes up, she goes down. This is where it is right now. 66.72 on a down spin. Okay, where's it going to be in 4 weeks? Well, I have no idea. But I do know the way it's looking, just by the way it's looking, it looks like it's going to come down here at 66, maybe 65, turn around, go back up. For how long? I have no idea. I don't like monthlies because I got to figure out where it's going to be in 4 weeks. That's 22 trading days. That's 20 trading days. Where's it going to be? I don't know. I have a hard enough time trying to figure out 5 days. Yeah, sorry. JCI is going to be a no. Oh, Mark wants to take a look at Win. One of my... Holy cow. Now, I do have Win. All right? My trade price is 92. Look where it is now. I jumped in at Win at the beginning of the second quarter. That was the first week in April. I still have it because the stock keeps going down. Look, in April, where are we? Yeah. Here's where we are in the beginning of April. Right here. Right? So I bought it at 98. $9 cost average down at 92. So now it's still going down. Now we're at 80. Okay, so you want to know what happens for the stock when it goes down? Here you go, win. I bought it back in the beginning of April at 90 something. What the heck did I do it? Hold on. Sorry, May 7th. I jumped in May 7th at 98. And then I jumped in July 15th at 85. Okay, so my average is 92. All right, so this week I sold the 86s. Now, if my dollar cost average, right, is at 92, I'm selling the 86s, which is $6 less than I paid for it. But here's the thing, if the stock is dropping, I have no problem with it whatsoever. As a matter of fact, I'll be looking at the 82s or the 83s next week. And I'm going to keep dropping my what do you call it? My covered call, my strike price every week until it finds its bottom. Once it finds its bottom and turns around, well, then I'll hold up with that and I'll wait and see how it moves. Okay? There's a lot to be saying about reading charts. It's really not that difficult and it's really not that easy. So it's kind of both. Okay? You can basically tell here, all right? She was at 110 last year. She drops down to 82. She shoots back up to 110. She's back down to 80. Okay? Down, up, down. That's the big picture. Okay, but you can take in and you can take a look at the small picture. Look at the small picture. Okay, look at that. Up, down, up, down, up, down, up, down, up, down, up, down. Look at how nice and neat it is. Okay, 1 week, week and a half, week and a half, week and a half, week and a half, a week and a half, almost a week and a half. Look at the patterns, the highs, the lows, how it's moving. Okay, great. So let's go and find out exactly where we are at this moment in time. Okay, so first off, win $80.98. More than likely we're looking at the 81. The 81 is right here, $1.22. So if you like win at this price, well, you're going to get you more than 1%. However, she's been in a fall since April. Okay, this has been searching for a 30-day bottom for a very long time. And I've been following it down because I believe in my trading strategy. Never buy something you don't want to hold long term. I got no problem holding on to win. I get a premium on it every single week. Great. It's not huge like I'd like it to be, but it's cash flow coming in, and that's what I'm looking for. I'm retired. I have a certain amount of money to play with. It's set aside, invested into some stocks, and it gives me a 1% return on a weekly basis. Great. That's what I'm looking for. I'm not looking for capital appreciation. Okay? So as soon as this thing finds its bottom, turns around, goes back up, I'll have to reassess my situation there. But until then, I'm going to continue dropping my strike price. Now this week I sold, what did I sell this week? I just said it a minute ago. I sold the 86s this week. Okay, the last 30 days. Here we are, last 30 days. Now, 30 days ago, we're at 88.50. We shoot all the way up to 90, drops all the way down, retraces. The 30-day bottom is today, because on the 16th, it was 83.23. Today, 83.19. So today is a new 30-day bottom. But is it the bottom? Hey, Lucky Larry, how you doing today? Is it the bottom? Well, we'll find out tomorrow. Tomorrow, she's either going to go down further or she's going to turn around, one or the other. Eventually, people are going to look at it and say, wait a second, win at 80 bucks? Hell yeah, I'm buying some of that. And that's what I'm waiting for. I'm waiting for that point. It's going to continue going down until you and I, the investors, saying, hey, this is way too cheap for this company, I'm buying some. When is that coming? Don't know. I already own some. I have a little bit of space to buy, to dollar cost average down one more time. Okay. Are all of these indicators on Thinkorswim? Well, this is Thinkorswim. I have no idea what indicators you're talking about. Hey, Thinkorswim has a ton. I'm talking a ton of indicators just for the fun of it, just to entertain Mr. Lucky Larry. Let's go take a look at the chart. All right. Now let's take a look at the studies. Ooh, quick study. Here we go. Look at all the indicators we got, Larry. We got alpha studies, bearish only candle patterns, bearish and bullish candle patterns, bullish only candlestick patterns, crossovers, cycle studies, daily studies, David Elliott studies, John F. Eller's studies, John Pearson's indicators, and it goes on and on. There's literally hundreds upon hundreds of studies. Okay, then you have the, what do you call it? Market strength studies. Look at all that. Huge amount. And then we go to this one. That one has more. This one has a bunch. This one has a bunch. That one, just a little bit. So on and so forth. Yep. Tons and tons of studies that they have on Thinkorswim. Anything you can think of, or create your own. What stock can I steal? Practice, okay. Yeah. All right. That being said, let's get back to where we were. That's just to show you there's plenty of stuff to get you confused and dazed for a long, long time. All right, so that was when been in ET since 09, love it. Okay, Disney, where I looked at that one. What are my thoughts on Globe Life? Isn't Globe Life a monthly? GL? I mean, it is on Warren Buffett's list. Oh, no, it's not. It's a weekly. Cool beans. Now, Globe Life's on Warren Buffett's list, so Olivia, well, hello. Please review JCI. We already looked at JCI, and that's a no. Sorry, dude. All right, Disney is super low. Yes, Dory, Disney is super low. However, I would wait for the bottom first. Now, how do you isolate the bottom? I isolate the bottom with a low and 2 days to the upside afterwards. Does it always work? No. Sometimes you get 2 days to the upside and then it drops down again. It happens. So you have to figure out where to isolate the 30-day bottom. And it could be almost anywhere. It could pop up at any day. All right. Globe Life. Interesting. First thing I want to take a look at is the numbers. Excuse me. Shit, enchilada. It was good. Enchiladas is good, but it doesn't agree with me. That's probably not a good thing. Eat stuff that don't agree with me. All right, let's keep the ball rolling. All right, so Globe Life, 89.69. Well, we're going to be looking at the 90s. And the 90s are paying $1.30. That's well over 1%. Now, 1% of $90 is 90 cents. You just move the decimal point over 2 places. That's all. Now, let's take a look at the chart. A year ago, 115. It topped out in the end of February at 131. Bottomed out at 39. Ouch, that must have hurt. Can you imagine that dropping down to 39? 39 in April? Well, look where it is now. It's at 89. That's a 100% increase within the last 3 months. Well, alrighty then. Well, let's see what happens. The last 30 days, right there. Yeah, I'm going to say no to Globe Life for this week. Okay, basically 30 days ago, we're down here at 83. Now, it went all the way up to 94. 83 to 94, that's an $11 move. $11 move on an $80 stock. That's a nice move. Well, of course, it's going to be profit taking come tomorrow. Just my humble opinion. My humble opinion is they're going to be profit taking tomorrow. Could be. Sorry, I'm going to have to pass on Globe Life. It is on my list, but I just don't like the numbers today. All right? And what do we got? They send a K1. Okay. AOA. Thoughts, please. What the heck is AOA? Now, if I say what the heck is AOA, it's going to be a no. And it is. Okay, it's a monthly. See that? That means I can only do it once a month. That's only 12 times a year. Now, I didn't go to college, I freely admit that, but I do know I would prefer to get 52 weekly checks than 12 monthly checks, especially when the weekly checks add up to a lot higher. I've owned Disney for years. Should have sold at 185. Now I'm going to tell. I tell everybody, you buy a stock. You never buy a stock until you have in your head a price in which you're going to sell or a time limit. All right, I'm going to buy Disney for a year, and I'll get rid of it in a year. Fine. I'm going to buy Disney. I'm going to hold on for 3 months. Okay. Or I'm going to buy iShares and I'm going to sell it as soon as it doubles in price. Have your exit price already figured out before you jump in. Because if you don't, it's nothing more than a glorified dust collector. And that paper, what do you call that? That paper profit, it's not a profit until you take it. Okay, if you buy a stock and you never take a profit, well, then it's not a profit. RG, really? We already said no to JCI, and you want me to look at CHTR? I never heard of that, CHTR. That's going to be a no more than likely. Look at that, 315, a little bit out of my price range. CHTR, CHTR, no dividends. Come on, dude, really? All right, I think I'll have to ignore you for a while there, RG. Everything you sent me so far is crap. Colt, so you invest under the company like James. Hey, Dennis Mancini. Starbuckies, let's take a look at Starbuckies. I have some Starbuckies, just to let you know. SBUX. Interesting. Okay, first thing I want to see, the chart, the high, okay? The high, the low, where was it, where is it, what direction it's going, that kind of stuff. Very first thing I always want to see. And it only takes a couple of seconds. High, low, where was it, where is it, blah, blah, blah. Okay, so next I want to take a look at the numbers. What can I buy it for? Well, tomorrow morning I can buy it at 73.36. What's the closest dividend? I mean, it's the closest strike price to 73.36. Well, it's going to be the 73. Okay, the 73 is going for $3. Great. The 74 is going for $2.56. The 75 is going for $2.13. The 76 is going for $1.75. The 76 going for $1.44. They're all way over 1%. Most of them are over 2%. Well, great. Ask yourself a question. Do I like Starbucks? Specifically, do I like Starbucks at 73.36? Well, I bought Starbucks at 88. It is what it is. All right. A year ago, Starbucks is sitting at 103. She has a double top at 107 in the middle of November of last year. Okay. Last 90 days. Here we go, last 90 days. We had a 90-day high at 89.73. That was 90 days ago, okay? 90 days ago, all right? She was at 89.81, great. Now look at this, on the 30th, April 30th, she's at 87.98. That's where I bought it, 88. I bought it at 88. Very next day. Okay, now when I tell people, when you buy a stock and the stock goes up, great. What happens if you buy a stock and it goes down? Well, it happens. Okay, I bought it at 88. See, right up over here at 88. Very next day, she drops down to 72.79. How do you think I felt? All right? But remember, rule number one, never buy something you don't want to own long term. I got no problem holding on to Starbucks. It pays a nice premium. It does. 3-4 days later, I dollar cost average down at 72. Okay, so I'm originally at 88. I dollar cost average down to 72. So I'm somewhere around 84, 83, I believe, my average price. Hell of a lot easier to get rid of it at 83 than at 88. It's going to hit 83 before it hits 80. Anyway. So she's up, she's down, blah, blah, blah. So the last 30 days, where is it? Last 30 days, right here. Okay, this is what we see for the last 30 days. 30 days ago, we're at the 30-day high. Okay, great. $80.75. She drops, a little bit of retrace. Drops again, finds the 30-day bottom on the 16th of July. Right there, 16th of July. 3 days later, nice little top right there, 79.47. And then 4 days to the downside. Well, here we are again with another company looking for a new 30-day bottom. So we are going to write Starbucks, not for this week, but for next week. S-Bucks. All right, so Starbucks is on the list for next week. Okay, great. Neil, anything better than Ford? Okay, there's plenty of things better than Ford. Don't get me wrong, I love Ford, but Ford's a little too high at the moment. I'm waiting for Ford to come back down again. All right, so I like Starbucks. The numbers work, great. I'm just waiting for it to find a bottom. 8/7 is the earnings announcement. Okay, but the EX date is in October. Well, alrighty then. Now, I don't pay much attention to earnings dates and EX dates. Well, wait a minute, I do pay attention to the EX dates, sorry. Can we look up Bud? Ooh, hold on. EW, I'm missing some of these. Ooh, I feel bad for you guys. I missed some of these questions. Hey, 86 is here. How you doing? Okay, so your strike price needs to be set up every 30 days. No, my strike price is every 7 days because I do weekly options, not monthly, weeklies. Sorry, Arrow. Thanks, Recon. Sheila, Big Bucks, Wall Street, EO5, thanks for the explanation. Trying to do 1% each week. Okay. Badfish, back again. Have you any upcoming EX divs on stocks under 15? Badfish, you ready for this? Oh, grab a pencil real quick. I'm not going to do this more than once. All right, you ready? NOK, SIRI, GNW, KGC, AGNC, NUS, VAL, and F for Ford. Those are under 10 bucks. Why the CMG option premium getting cheap? I don't know. We'll go over that in a minute. All right. Sorry, I'm continuing with my videos over here on my new page. All right, so as I was saying, that's a list of stocks under 10 bucks. Next list, quickly. Wait a minute, I just did that one. All right, you ready? Siri, MPW, Ford, WBA, CLF, VFC and Key, Macy's, and AT&T. All right, so that's about 15 or 20 stocks under 15 bucks. All right, so hopefully that works out for you. All right, back to where we were. What stocks are you looking at for, I missed that one, damn it. I like Disney because I'm still a kid, but I want to see what earnings say, which should be around the 8th. All right, I have 1 million. What's the best ones for cash flow? Oh, Archie, I'm glad you got 1 million, good for you. Thoughts on Whirlpool? I like Whirlpool. Now, Archie, I honestly can't tell you what to do. I have no clue who you are, what your risks parameters are, what your goals are, what your thought process is. I know absolutely nothing about you, so I cannot tell you basically anything. Sorry. Thoughts on Whirlpool, WHR. WHR. Okay, first thing, high, low, where was it or is it on the chart? Great, everything looks fine. The ask price is 112. All right, so that can't be right. I hate it when the market maker does that. Take a look at the last traded price, 101. Okay, the bid, 101.57, the ask, 112. Yeah, right, bullshit. Don't look at the 102s. 102s, that's over 1%. Great. Hypothetically speaking, tomorrow morning when all these numbers are more accurate, because after hours the market maker pulls this kind of crap and makes a wide spread, so you really can't judge the numbers very well. But during market hours, the math is always the same. You take a look at what you're buying it for, okay, and then you divide it by what the current strike price is. If it's more than 1%, great. If it's not, well, it is what it is. But Whirlpool is usually over 1%. Well, I'm going to take that assumption. All right, so a year ago, Whirlpool's at 150. That was a year ago. Drops to the 28th of May for the bottom at 83.62. That's a 50% drop. Is there a transaction cost when selling call option? Yes, there is. Depending on what broker you have, some brokers charge more than others. Okay? Some brokers have a fee, but the exchange always has a fee. You can think of it as gas money. Now, I remember as a high school teenager, anytime we wanted to go someplace, go to a party, go roller skating, go to the beach, yeah, we wanted to have fun. We wanted to do something. Well, we needed to pay for the service. Gas money. Same thing. Okay, if you're going to be playing this game, transaction cost, cost of doing business, however you want to. Hey, Party Springs is joining us. However you want to interpret it, hey, however you want to interpretate that, okay, it's cost of doing business. Okay, Whirlpool, let's take a gander. Last 90 days, here we go. She's up here at 90 days ago, 118.69. Then at the 5/29, the end of May, finds the bottom at 84.18. Last 30 days, right there. 30 days ago, we're at the 30-day bottom, 86.96. The high was last Thursday, and that was 115.45. All right, well, she's coming down. Now, as of tomorrow, the 30-day bottom is going to disappear, and we will have a new 30-day bottom, which is 30 days ago, 96.21. What does that mean? Well, we're still pretty close to the bottom where we are right now. Take a look at it. Okay, it's right down here. Okay, your high's there, your bottom's here. So tomorrow would be a good indication of, is it going to go down further, or is this the turning point for it to go back up? Because once you get rid of this 30-day bottom, which will be tomorrow, because tomorrow's the 26th, and then we'll look at 626 instead of 625, and that will disappear, and we'll have a new 30-day bottom. Okay, so tomorrow will look a little bit like that. All right. So here's the 30-day bottom, 30-day top, coming down, challenging the new 30-day bottom. Can it make it lower, or is it going to stay where it is? I don't know. We'll find out tomorrow. Now, but if that's the case, well, where's this thing going to go from there? Usually when you hit the 30-day bottom, turns around, goes back to the upside. Private, please explain how it works. Where do I see the transaction cost, the spreads between the bid and the ask? You got to be really new not to know that. Not that I'm insulting you or anything. Okay? Any trading platform you go to, whenever you put the ticker symbol in, okay? Right here, this is Thinkorswim. We put the ticker symbol in. Right underneath it, you're going to have the last, the bid, the ask, the high, the low, the closed, the the open, high, low, closed, volume, everything about the stock right there. Okay, whatever platform you're on. Okay, TD Ameritrade, E-Trade, Schwab, Webull, Robinhood, wherever you go to trade your money, wherever, it doesn't really matter where you go, you're going to have bid, ask, high, low, open, close, and volume. How many shares traded. Okay. Now we're doing covered calls. Okay, that is stock options. So we buy the stock, great. Now what do we do with it? Well, we sell it to someone else for basically the same price we just paid. So we're currently looking at Whirlpool. Damn it. We're currently looking at Whirlpool. The current price to buy Whirlpool at this moment in time is $112. That's what it says, but it's not really true because the market maker put those numbers up there. Now, the last trade was 102.57. So more than likely, the bid is going to be 102.57 and the ask will be, 101.57 and the ask will probably be 101.62, 63, somewhere there. It's usually a 2 to 3 cent spread between the bid and the ask. So at 101.60, great. The closest one's going to be the 102, and that's paying $2, which is almost 2% for the trade. But here's the thing. We don't know where the 30-day bottom is. Okay, well, we do because the 30-day bottom was 30 days ago. All right? In a couple of days, that's going to disappear, and this will be the new 30-day bottom. But what's going to happen tomorrow? Is tomorrow going to be higher or lower? Well, if it's higher, that's 1 day to the upside. Okay, we have 2 days to the upside, great. That's an invitation to jump on in. I like a 30-day bottom, right? See, 30-day bottom with 2 days to the upside. 1, 2, and then she starts going up. Okay, here's another one. Bottom, 1, 2, she starts going up. Not huge. Now, I'm only looking for 1%. I honestly don't need it to go that high. I honestly don't. Okay, I buy it at the at the current market price, which would be, well, whatever it is. I can't do this one because I don't like when the market maker does that. Okay, long term, 27, 30-ish years, where would you put 23,000 in a Roth IRA? Oh, really? Seriously? You seriously ask me that question? I don't. The longest I've ever held anything was 9 months. Okay? I'm looking at a 1% per week. That's 50% per year. You have any idea what 27 to 30 years is at 50% per year as opposed to what you're going to get? Think about it. 50% per year, and you want to take something and dump it into a stock that normally gets anywhere between, 6 to 8% per year if you're lucky? But that's you. If that's what you want to do, great. You're definitely in the wrong place. Sorry, that's not what I do. I don't do anything long term. Long term for me is 30 days. That's me. I'm 60 years old. I'm retired. The money I have has to pay my living expenses for the rest of my life. So my little nest egg, great. I make 1% off of that every week. That's enough to pay my bills. Wonderful. It pays my bills and my account continues to grow just a smidge. Just a smidge. So every week it gets a little bit higher. My account gets a little bit bigger. So that's what I'm looking for. I'm looking for cash flow. I'm not looking to dump money someplace and wait for it to grow. All right? I'm past that point in my life. All right, come on. Where are you going? And there we go. So I'm not looking for capital appreciation. I'm looking for consistent cash flow. Hey, Bob showed up. Nice to go. Oh, Bob, where are you? Where are you? There you are, Bob. How's it going there, Bob? Holy shit. Honestly, they were good. They were good, but I shouldn't be eating spicy food. Damn it. Eating Tums like the candy. All right. All right. NTPGX. I can't do that. Hey, all good. Hope all you're well. Okay, private. So when selling a call, is a transaction cost only in the spread? And it's incorrect. All right, dude. That's way too much information. YouTube, it pops up for like 15 seconds. If you can't read it all, you don't get to see it all. So, I missed half of it. Sam Casey, what's your thoughts on realty income for long term? All right, Sam, you're going to tell me what you think long term is. That interesting question. Now, the question jumped up really quick. I'm trying to find out where the questions are. All right, I can't find them. Oh, there we go. So when selling a call, is the transaction cost only in the spread? No. If I understand correct, or does it show up somewhere else? No, your transaction costs are your commissions. Now, the spread is, the bid is what you can sell it for. If I own the stock, I can sell it at the bid price. If I want to buy it, I have to buy it at the ask price. So think of the bid and ask, the spread. Think of your grocery store, the guy down the street. Okay? He's going to buy a gallon of milk for $3 and he's going to sell it to you for $4. Okay? The spread is his profit. He's got to pay for it from the guy who makes the milk, or the guy where he gets his milk from. And then he stores it in his freezer and he has all these other expenses, so he has to make something off of it also. That's the spread. So the spread is collected by the market maker. The market maker is a person, male, female, whatever, who buys and sells. That's their only job. They're creating the store, kind of like 7-Eleven, Circle K, Quick Stop, whatever, the local store right down the street. Okay, so we're going to come in, we're going to buy, or we're going to sell. When we're buying, we're paying this price, the ask. When we're selling, we're collecting that price, the bid. Okay, so at this junction, okay, what we're doing here, what I'm showing you, what I do, is I buy the stock. When I buy the stock, I'm buying it at the ask price. When I'm selling the option, I'm selling it at the bid price. All right, so how do I find out what my profit is? Well, I take out what my profit is. Oh, who sent me that? Cool beans. I have no idea what that was, but that was nifty. So the sell price of the option, remember there's two different trades here. One is the option trade and one is the stock trade. Okay, think of it this way. Stocks are traded, bought and sold in New York, the New York Stock Exchange, and options are at the Chicago Board of Options in Chicago. Two totally different places. We buy our stock, we sell our option. We're looking for someone to give us a consistent cash flow of 1%. Is that going to work here? Well, I don't know because he messes up the numbers. Let's go to one we actually know. One I actually like, Macy's. I love Macy's. It's very profitable for me this year. Last 30 days for Macy's. Here we go. 30 days ago, we opened up at 1903. A week later, we're at the top at 2047. Now, on the 15th of July, Macy's walked away from the negotiating table of a buyout. So the market maker took advantage of that and dropped the price. Well, fine, great. I jumped on that and bought a bunch. Why? Well, here's why for me. Since December, check it out, from December till just recently, this thing has been channeling sideways for me 18 and 20 for the last 8 months. Great. Well, now it dropped below that price. Well, hell, I'm going to jump in and buy some, so I did. I just like Macy's because it's been working out very nicely. But if I sell a call option, then I create an option. Where is it? So where comes the transaction cost? Oh, that goes directly to the, what do you call it? Hold tight. I'm actually going to do a trade and you'll be able to see. All right? I'm going to actually do a trade right here on Macy's. That way, those of you guys in the audience can understand what it looks like when I actually do one of these trades. When I say I'm looking for 1%, what does that mean? Well, we're going to do one. You ready? I like Macy's. All right? Plain and simple. 1652. I like it at 1652. The 1650s are going for 36 cents. 36 cents on a $1650 stock, that's 2%. Hell yeah, count me in. Macy's has been in business for over 100 years. In business for over 100 years. You cannot turn on your television any time in the year Macy's New Year's Parade, Macy's Valentine's Parade, Macy's Easter Parade, Macy's Thanksgiving Parade, Macy's 4th of July Parade, Macy's Christmas Parade, Macy's New Year's Parade. The name recognition Macy's had is worth a hell of a lot more than those people offered them at the trading table. Okay, because I remember a couple of months ago, I think it was back in April, where they had an offer and they said, "Oh hell no, we'll buy our stocks back at 24 before we sell to you." I remember that conversation, but this time it drops. So what? Big deal. All right, so I jump on a Macy's. Let's say I jump on a Macy's tomorrow morning, and I pay the $16.52. Great. So now I own 1,000 shares at $16.52. Let's actually do a trade so you see how it works. All right, so I've already decided I like the $16.52. Great. I'm going to change this first to covered stock, because those are all the trading strategies there are. Can you see that? Let me pull it up again. Okay. You got single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, collar, synthetic, butterfly, condor, iron condor, vertical roll, collar with stock, double diagonal, unbalanced, deep and wide. Then look at this. Look at all those different trading strategies you can do with options. It's a bunch, but I only want you to concentrate on one, because once you perfect this one, it's simple, it's easy, it's predictable, it's consistent, and it's safe. It's one of the safest trading strategies there are. You buy the stock, you sell someone the rights to buy it from you for the exact same price you just paid for it. But the thing is, we're timing it in a way where we're not getting it at 30-day bottom, we're not getting it at 30-day top or 30-day bottom, we're getting it as it's coming off of a 30-day bottom. So stocks go up, they go down, they go up, they go down. And what we're looking at is when they're getting ready to pay their dividend, one. Number two, we correlate that with the calendar. And then we look at where the chart is. Is the chart telling us it's a good time to buy? Because stocks go up, they go down. So once it goes down and then turns around, starts going back up again, that's the right time to buy if the numbers work. M expires next Friday. How many strikes out? I like to go at the money. Now, what do I mean by that? Well, at this moment in time, 1652 at the money would be 1650. So if I come down here to the 1650 and I click on buy, it automatically fills right there to a double trade. What do I mean by double trade? Well, I'm actually buying the stock and selling the option at the exact same time. Now, when I do that, I want to do a market order, all right? Because a market order will fill instantaneously. If we ignore the stock just for the sake of the sell the call option, where it comes, dude, you really got to do less words, because I can't read them all. If we're going to do a stock just for the sake of the sell a call option, where comes a transaction cost? All right, hold on a second. Is it deducted from my premium? No. Private. Sit, chill, relax. I'm about to show you. Patience is a virtue. Okay, oh, hold on. I got to get this thing. I'm shooting videos at the same time. So I'm recording live and doing videos all at once. Multitasking. All right. As I was saying, I'm going to show you the example. You will see the commissions and the fees in a second. Just hold up. So as I was saying, when I click on covered call, it's going to preload this for me. I'm actually buying something and selling something at the exact same time. It's two trades in one. So I'm buying, now you can change this if you want. Some people get intimidated by 1,000 shares. I'm buying 1,000 shares of Macy's and I'm selling 10 contracts. Okay, so you need 100 shares to sell one contract. 200 shares, 2 contracts. All right, so if I'm buying 1,000, let me change it to 100 so that makes it easier for some of you guys. Okay. If I'm buying 100 shares of Macy's, I'm going to sell one contract. The 1650, I already told you that. I like the 1650. Okay, I'm buying the stock, I'm selling the call. They're right there at the market, and it's going to be a day order. Now I'm going to hit the confirm and send. All right, what's that going to do? This shows me the actual trade itself. Now, I always tell people to read it out loud because your eyes can deceive you. Bob, can we take a look at Alcoa? I'll take a look at it a little bit. All right, so give me a minute. Let me finish up this, and then we'll take a look at Alcoa. Now, read it out loud so you hear it, not just see it. I'm going to buy one covered call Macy's 100s. That's the weekly. 2 August 24. That's next Friday. The $16.50 call option along with the Macy's stock to open at the market. You see where it says right there? The market to open. What does that mean? Well, I'm opening up a stock order and I'm opening up an option order. I understand that it's 2 transactions. I just want to understand the transaction cost for the call option. Dude, freaking chill, would you? I told you I'm going to get there. Here we go. Okay, this is what the trade is. Break even right there. $16.07. That's my break even. Okay? Now, underneath that, my maximum profit on this particular trade. $42.50. Great, understood. Underneath that is the maximum loss, or how much is it costing me for the trade. And here we have the commission. The commission is 65 cents for the call option. It's right there. Okay, you wanted to know where it was? I told you we would get to it. So if I'm doing one contract, it's 65 cents. So let's get rid of this and let's do 3 contracts. 3 contracts. All right, 300 shares, 3 contracts, $1.95. There's the price right in there. Now, you 3 want to be invited to the live? I got to know who you are. Okay, so you want to be invited on the live, you need to DM me with your phone number. I'll give you a call and see if you can contribute to the conversation. I don't want to talk about NASCAR. I don't want to talk about new hairstyles. I don't want to talk about politics, religion, nothing but dividend investing for weekly cash flow. Now, you over here on YouTube, I hope that answers your question. Okay, when you do a trade, it tells you everything right there. What am I trading? What is the trade? Buying 3 covered calls, Macy's, blah, 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 blah. What's my break even? Blah, blah, right there. What's the maximum I'm making on the trade? Right there. What's it costing me? Okay, it's costing me this, and there's the commission right there. So before you hit the send button, make sure you understand all of this and make sure you're okay with it. Because once you hit that send button, well, you're obligated to buy it. All right, delete that. Let's go back to where we were. Okay, now here we are, back to where we were. So I do like Macy's, and I do own some of Macy's, and I will continue buying Macy's because it's been very nice to me. Alrighty, let's move on to Alcoa. First thing I want to take a look at is the chart. Fine. High, low, where was it? Where is it? Interesting. Okay, it looks a little interesting right here. I want to see that. The last couple of days. But let's move on. At this moment in time, 33.20. 33 is going for 88 cents. You take the 20 cents off of that, that's 68 cents you're walking away with. 68. Oh, sorry for asking, James. One last question. Where do I see the cost of the call option? Okay. Will M get called out before Friday expires? I honestly don't know. Okay. Nobody knows what Friday's close is going to be. The cost of the call option, you're kind of curious, is over here in the option chain. Okay, the option chain you'll see over here. The strike prices, 29, 30, 31, 32, 33, 33.50, 34, 34.50, so on and so forth. Those are the call strikes. Those are the prices I can sell for. And what is the cost? Well, the ask is if I'm buying. If I'm buying one of these options, I'm on the ask column. Okay? The 33, the ask price is 94 cents per share. Okay, if I'm selling, I'm collecting $88 per share. The difference between the 88 and the 94 is called the spread. The spread goes to the market maker. He's the one who does the buying and the selling. Okay, I don't know who he is. I don't know where he lives. All I know is if he posts the number, he is required by law to fulfill it at that price. Now, if you want to do a limit order, which is totally different than a market order, he can decide whether or not to fill it if he feels the desire to do so. But market order, he's required to fill it instantaneously. Hopefully that answers your question. So, Alcoa. Alcoa at this moment in time, 33.20. We're looking at the 33s, 88 cents. Great, that's more than 2%. Wonderful. What's the chart telling me? The chart's telling me a year ago we were at 35.14. We bottomed out in the beginning of October at 23.07. Now from 23.07 to the high at almost 46, that's 100% increase in 9 months. Well, hell yeah, there's going to be profit taking, and there was. Profit taking to a point to we're sitting at 32.91 at the moment. Well, if you double in price and you don't take your profits, that's your own damn fault. Okay, you make money by buying low and selling high. If you're buying at 23 and it hits 66 and you don't sell, well, that's your own damn fault. Stocks go up, they go down. That's all they do. Okay, they don't come to your house, change your tires, wash your car, do the dishes. Nope, they don't fold the laundry. They don't take the dog for a walk. Stocks go up, stocks go down. That's it. You buy, it goes up, take your damn profits, move on to another one. You buy, take your damn profits, move on to another one. Stop marrying these things. These things, I remember Bill Burr saying, hey, let's get married. Oh, is this the line I stand in to lose half my shit? Same thing. If stocks go up, great, take your profits. If it goes down, it's your own damn fault. Decide before you buy where you want to get out. Because you don't make your money buying, you don't make your money selling, you make your money when you buy it. Okay, you need to know where is it going before I buy it. So here, we're looking at Alcoa. Okay, great. 30 days ago, we were at $40.10. About a week and a half later, we got the 30-day high, and that was $43.10. There can only be one 30-day high, and there can only be one 30-day bottom. And apparently, the 30-day bottom is today. So, is it going up tomorrow? Is it going up Monday? Going up Tuesday? We won't know until tomorrow, Monday or Tuesday. But on a 30-day bottom, I like 2 days to the upside. And she's giving 2%. I'm writing Alcoa down so when she does find the bottom, I want a little piece of that one. Alcoa. All right, I got that written down for next week. That's a good pick there, Bob. However, I'd still like to see where the bottom is. Don't get me wrong, Alcoa's been in business for over 100 years. So why wouldn't I want to buy it? But that is the spread. I'm referring to the 65 cents in the transaction cost. Where do I see that? Holy motherfucking shit, you gotta be kidding me. Right there. See it? Just before you do the trade. Hold on. I gotta wait on this one. Shooting all these videos. Lovely, lovely, lovely. Okay, so after you confirm your trade, all right, buying 10 covered AA, blah, 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 whatever. Okay, break even price, okay, that's the break even. If the stock goes down below the 32.01, well, at the moment it's at 33.20. It can go down to 32.01 and I'm still making a profit. Okay, that's my break even. Underneath that is the maximum profit I'm making off these trades. Remember I say I want safe, predictable, consistent. Predictable. I know what I'm going to make before I even do it. My maximum profit is right there. What is it costing me? This is what it's costing me right here. Where is the commission? The commission price is right there. Right there. Every number you need to know having to do with this trade is right there. This is 10 contracts. 10 contracts is $66.50. If I get out of here and I go, whoops, and I do, whoops, let's get out of there. And I do one contract. Look at that. Exact same freaking place. Right there. Okay, cost of trade including commission, $3,201. 65 cents is the commission. Right there. Hopefully I'll never have to point that out again. Everything you need to know is already there for you. Let's get out of that. Let's get out of that. Let's go here. And let's get rid of that. So, I like Alcoa. Thanks. You got that? Alrighty. So, Bob, I do like Alcoa. I am going to put it on my list for next week because I want to find the bottom. Once I find the bottom, and if the number's still working at 2%, great. I'm going to jump in and buy them. Okay? Now, at this moment in time, hey, Mary, your other YouTube channel has no sound. Damn it. That means I got to switch microphones. Thanks for that. Nice having two microphones. All right, let me do a quick check, make sure it's still working. Make sure it's still working. Yep, it's working. Okay. We're done with Alcoa, right? Yeah. So, like I said, I wrote down Alcoa. So when it does find the bottom, I want to jump in. Thanks, very kind. You got it private. So when it finds its bottom, I want to jump in on it. Now, before you say, well, actually, I don't have any money at the moment. The reason why I don't have any money, let's find out what we have going out this week. We get Macy's in the money, AEO is in the money, Walgreens in the money. So that's 3 companies I'll be losing this week in this particular account. This account here, 1, 2, 3, 4. Freaking awesome. 4 companies I'm losing those for. Next account, 1, 2, 3. 3 companies I'm losing. So I have plenty of space to buy some Alcoa when she hits that bottom, turns around, goes up. All right. Now, I like to do that on Monday, so I'll be checking it on a Monday to see what Alcoa does. So you guys remind me, for those of you guys in the morning trading group, we're going to take a look at Alcoa over the weekend and see if it's that good for jumping in on Monday. Where are we? All right, so that's Alcoa. Let's get some more of these questions out of the way. Raldo. To get weekly premium, do you close the option trade alone or wait for expiration and repeat the trade? Now, Rob, that's a great question. Let me give you a little bit of a history lesson. Okay, the great John F. Kennedy once said, "We cannot answer the questions of tomorrow with the information we possess today." What do I mean by that? Well, I have no idea what the stock's going to do on Friday afternoon. I do my buying on Monday. All right, I look for that 1%. Great. What's the chart telling me? Chart's up, chart's down. It should be bouncing off and go to the upside. That's what it should be doing, hypothetically speaking. If it does, great. I'll be back into cash Monday. Wonderful. I won't know that until 3 o'clock tomorrow afternoon. So until 3 o'clock tomorrow afternoon, I really don't know. But you're kind of right. Okay, I buy a stock on Monday. If I can be out on Friday, great. I'll be back into cash on Monday. That's a great quote. You like that one? So, here's the thing. If I buy it on Monday and on Friday it's not in the money, I'll take that stock and do the exact same thing next week. I'll take it and I'll do it the next week. And I'll keep doing it the next week. That's like AEO, and Win I've been carrying since the beginning of April. Okay? Now, I have no intention in selling at a loss. Because remember the 5 rules. Never buy something you don't want to hold long term, because you just might have to. Never sell at a loss. It defeats the purpose of the whole game. Make sure the company has 20 years or more of increased dividends. Weekly options, because I like weekly cash flow. I'm not into this monthly cash flow crap. The numbers just don't work the way they do with the weeklies. Weeklies I can get 1% a week. Monthlies I cannot get 4 or 5% per month. I can't get it. It's like very rarely is it available. And with the weekly, I only have to guess where it's going to be in 5 days. A monthly, I have to figure out where it's going to be in 4 or 5 weeks. Yeah, no thanks, it doesn't work for me. Okay? So, I'm retired. I have no problem whatsoever jumping online every 10 15 minutes. Hey, Mary, what do you think about CVS? Well, we'll take a look at CVS in a few minutes. Okay? Actually, we'll take a look at CVS in a couple seconds. But that's what I'm looking for. Safe, predictable, consistent 1% per week. And if I can find a decent stock, don't get me wrong, Alcoa is a great, decent stock. It's been in business for over 100 years. Okay? They have no problem whatsoever increasing their dividends consistently. And if everything works out and I can get 2%, hell yeah, I'm doing that one. It's like, look, here's the 30-day top, 30-day bottom. What's coming next after a 30-day bottom? Well, investors like you and me say, wait a second, Alcoa is cheap at this price. Okay? So once we say, hey, it's cheap at this price and we start buying, yeah, the stock's going to start going up. I'm only going to want that 1%. 1% is a hell of a lot easier to get than 3, 4, 5, 8, 10, 12%. 1% is easy. That's all I'm looking for. 1% a week. Safe, predictable, and consistent. All right? I have no problem whatsoever holding on to Alcoa, especially if it's going to give me 2% a week. All right, CVS. Let's take a gander at CVS. Now, CVS is almost like Walgreens. There's a CVS and a Walgreens in every major city in the United States. Okay, it's the major drug puller for the elder generation. We gotta get our drugs somewhere. Okay, all right. We need our Prozac. We need our little blue pills. I mean, hey, we are addicted to that prescription drug. Now, I personally don't take any. That was a great explanation why you prefer weeklies. Thank you very much. So, prescription drugs, you only get a couple of choices. Walgreens, Walmart, CVS. I don't know where else you buy them. I don't take any prescriptions whatsoever, so I really have no clue. The barber is joining us. Cool beans. I have no idea what you do, barber. All right, let's take a close look at CVS. Always, always, always. First thing, it takes 2 seconds. 2 seconds. High, low, where was it? Where is it? Great. Really, it's that quick. Okay, it's right here, right now. The low is down here, 52, and the high is way up there at 82. Okay, I'm not at the bottom, and I'm not at the top. I'm somewhere in the middle. Fine. Let's progress to the numbers. What are the numbers we're looking at? $58.95, the purchase price. If I'm buying it tomorrow morning, $58.95. Well, what's the closest strike price? Closest strike price is $59. Well, it's going for $1.05. That's almost 2%. So 59 and 59 is, what is that, 118? All right, so we're just a smidge under 2%. I don't mind. Okay, a smidge under 2% is nice. Interesting flavor. Water, lemon, and honey. It's supposed to be good for me. Anyway. All right. A year ago, we're at 73.30. Topped off in the beginning of January at 83.18. Bottomed out end of May at 52.84. All right, 52.84 was the bottom of the year. Well, take a look. What's the movement? Up, down, up, down, up, down. But you can't, seriously, you can't mistake that for anything else. Let's go to the last 30 days. Check it out, 30 days ago. Way up here. Down, up, down. Well, she's on the upside right now. Great. 30-day bottom. Well, it's not a 30-day bottom, but it is a low. Excuse me. All right. 30 days ago, we topped off at 61.98. Our 30-day bottom, 55.80, shoots back up, 62.04, drops back down to 57.38. Now we have 2 days to the upside. All right, well, here's a high right there. There's the bottom, 2 days the upside. Great. There's your invitation to jump on in. Now, I have a bunch of money sitting around doing nothing, so I think I'll actually buy some of these. And we'll actually do them right now. Why the hell not? That's it? Okay, we got 9 grand to play with. CVS. All right, the 59s. I'll go for the 58s. No, I don't want this week. That's tomorrow. I want next week's. Here we go. The 58s for 158. Okay, cool. So I'm going to do the 58s. The 58s right there. 5. All right, so I'm going to do 2 covered calls CVS. All right, the 100s. 2 August 24. That is next Friday. The 58 call CVS 5703 limit order. No. I want market order. Market order. The maximum profit. Well, check out the excuse me. The break-even stock price, 57.03. Well, the current price right now is 58.95. My break-even, so anything above 57.03 is going to be a profit. Okay, fine. The maximum profit I'm going to make off of this is 194. So I'm going to get my calculator out real quick. Clear that. $194. What is it costing me? Well, this is a margin account. Okay, so margin account, you're paying less money. So I'm paying 5,542. 554. Whoops. Divided by 5542 comes to a grand total of 3.5% for the week. Now, here we go. It's CVS, number one. They've been in business for over 100 years. They're in every major city in the United States. It's the drug capital of, well, it's one of the drug capitals of the United States. You get CVS, Walgreens, Walmart. I don't know what other pharmacies there are, but it is what it is. It's a 3.5% trade. Why the hell not? Off to the races. It should fill. All right, outside market hours. I have no idea what he just said. So it looks like I'm going to have to do a limit order outside market hours. Same thing. Same trade. So outside market hours, it will fill first thing tomorrow morning. All right. I could have done more. Let's change it to 3. Why not? Let's change that order to 300. All right. All right, so 300. So I'll do 3 contracts, CVS, a little over $200. Why the hell not? All right, let's go back to my other account right here. All right, that being said, I like CVS. Why not? All right, Marvel. Ooh, Sheila, you want to take a look at Marvel, huh? MRVL. Yeah, I'm going to say no to Marvel, only because she's in a little bit of a downturn. Right. A year ago, we were at 63.79, bottomed out in November, beginning of November at 45.56, topped out in the beginning of March at 85.42. Now, look at the last 90 days. I mean, that is a pattern and a half. Up, down, up, down, up, down. Very slow movements to the upside, but really fast to the downside. Look at almost 3 weeks to the upside, 3 days down. 3 weeks up, 3 days down. 4 weeks up, 4 days down. It's a distinct pattern. James, no sound on YouTube again? Really? It's working. Hold on a second. Hold on a minute. Before we go much further, give me a dime so I can phone my mother. Audio. Hello, my. Oh, fuck, that thing's gonna be dead. Damn it. All right. So we're gonna change that. We're gonna get rid of that. All right, this is dead. Audio capture, audio input, default. Might as well use the default. Is it working? No, it's not working. Delete. Let's try it one more time. Try one more. Audio input. We'll use the video camera. There we go. There. Now it's working. All right. Sorry about that. It has a tendency to do that every once in a while. Turn that one off. Don't get me wrong. Those little microphones are awesome, but every once in a while when the battery dies, you got no choice in the matter. Hakuna's here. Hakuna from Sweden. I can't eat spicy food either for my esophagus. Yeah. Yeah. I was looking at, I'm thinking to myself, it looks good. I remember the last time I had it was really good. Is it really going to bother me? Apparently it is. All right. So we got the sound fixed. All right, Marvel. Take a look at Marvel. All right, Sheila. Almost forgot. Last 30 days, right here. Definite up-down movement. Great. See it? Can't really mistake it. 30 days ago, we're over here. 68.20. The 30-day high is right up there, 76.46. And now we're at our 30-day bottom. And we're looking for a new bottom. Once we find that bottom, it might be a great opportunity. The 64.27, looking at the 64s, $1.88. Well, that's more than 2%. Hell yeah. Let me put Marvel, let me write Marvel down. MRVL. So I like 2% trades. I do. Don't get me wrong, I'm shooting for 1%. That's my goal, 1% per week. But if I can get a 2, hey, I'll take it. Why not? I like 3.7. Recon, so do I, but not as often. Ford is way down now. Oh, Secretariat. Let's take a look at Ford. Now, we looked at Ford last week. Holy shit. That's a huge drop. All right, so let's take a quick look at Ford. I see in the chart, fine. Now let's look at the numbers. 11.23, the 1150s are going for 15 cents. So that's over 1%. The 11s are going for 35. Take 23 off of that. You're looking at 13. Yeah, you'd be better off with the 1150s. I think I'm going to jump on some Ford. And I think I have some money left over. Holy shit, 11,000 bucks. Let's jump in some Ford. Only because I like Ford. I do. And if they're offering me that at this position, with a big, huge drop like that, look at this drop. With a drop, like we're talking about Ford, okay? We're talking about a company that's been around for over 100 years. We're talking about a company that didn't take any bailout money from the U.S. government, okay? Okay, Ford has been around for over 100 years. They've seen World War I, World War II, Korea, Vietnam, Afghanistan, Iraq, Iran, all that Desert Storm crap over there in that Dust Bowl. Okay, you've seen the stock market crash. It's seen the Great Depression, and it's still in business today. Why not Ford? So, like I say, why not Ford? It's been in business for over 100 years. Last 30 days, here we go. 30 days ago, we're at 12.12. We're at the 30-day high at 14.85. There's a big drop. There's a big drop for a reason. What's the reason? Does anybody know? Anybody know why Ford dropped as much as it did? I really honestly don't care, because when you see a drop on a company like this, usually it's something big happened. It's usually something big, or it's just the market maker taking advantage of a bad report. Because if you look closely, look really close, okay? Yesterday, she opened up at 1373, hit a high at 1388, and ended up closing at 1367. What's the reasoning to drop it from 13 all the way down to 11? There's probably no reasoning whatsoever. But the market maker has the power to do that. So if the market maker decides, hey, I'm going to drop the price only because I can, what happens? Well, if you look behind that, you're going to see the blue line back there. See these blue lines right here? Those represent volume. All right, that's how many shares are trading. So let me show you something a little interesting. I show this every once in a while. I find it to be enlightening. Now that's WBA. I want to look at Ford. All right, here's Ford. Now, look at the blue lines down here at the bottom. That's the average day movement. See it? Look at today. Huge, huge move. But let's not look at that at the moment. First thing I want to show you is this right here. Okay? The bid and the ask. The bid is 11.22. The ask is 11.23. It's only a 1 cent difference. So keep that in mind. Okay? Now, if you see over here, this number right here, that is the average daily volume of Ford shares that trade every single day. 54 million shares. ALGN. Remind me in a few minutes. I've never heard of ALGN, so it's probably going to be a no, but I'll take a look at it. Now, the average volume is 54 million shares. Now, there's only a 1 cent difference between the bid and the ask. That's the spread. So clear that. We're going to take 1 penny, that's the spread, and we're going to multiply it by 54 million shares that are traded on a daily basis. Okay, so the market maker every single day on Ford is making, damn it. Every day the market maker is making $500,000. $540,000 just to the market maker. He's only getting 1 penny per share. Okay? So he gets some bad news. So what does he do with the bad news? Well, he takes advantage of it. How does he do that? Well, instead of just opening it up at 13.50 or 13.20, he drops it all the way down to 11.78. And what happens? 261 million shares traded today. So here's a question. Multiply by 261 million shares. So the market maker today made $2.6 million. Yesterday he made $500,000. Today he makes 2.6. Why? Because he got some bad news and he took advantage of it. Now, out of those 260 million shares that traded today, how many were buyers? How many were sellers? Now the market maker dropped it from 13 down to 11. Great. If I'm a buyer and I see that, oh hell yeah, I'm going to buy. Are these all buyers that bought 250 million shares or 260 million shares? Or are those sellers that are panicking? What do you mean Ford's dropping? Let me get rid of it, blah, blah, whatever. Whatever the reasoning is, 260 million shares traded today. Okay, why? Did one of the factories blow up? did one of the did something happen in the Ford world that caused a huge drop like that? Ford had its highest volume yesterday in more than a year. Well, that's no reason for the stock to drop today. No reason whatsoever. So why did the market maker do it? What did he get divorced and he needed to pay off an ex-wife? I have no idea. But anyway, don't always believe everything you see. They had earnings. But still, even if the earnings are down, is that a reason to drop the stock price so much that a whole bunch of people, we're not talking about, two or three, we're not talking about 2 or 3 times the amount of volume. We're talking from going from 63 million, okay, 63 million to 260 million. That's a huge freaking jump in volume. And who profits off of it? The market maker. Okay, the market maker did it because the market maker, well, just because they missed earnings, big deal, whoopee. So he drops it and he gets all these people buying and selling. It's a freaking ingenious thing to do. Great, business as usual. All right. So for the last 30, 60 days, he makes $500,000. Well, today he made 2.6 million. Pretty ingenious if you think about it. All right, let's go back to where we were. All right, so that's Ford. I just said I was going to buy some Ford. What was I doing? I like it at 11. Okay. So at 11, what is that getting me? You gotta be kidding. That's a hell no. The numbers is absolutely horrible. The 1150s. 320, 5500. 320 is the profit. What's it costing me? 55.76 comes to a grand total of 5.7%. Hell yeah, it's Ford. Why the hell not? My break even is 11.18. At the moment, it's 11.23. Well, I'm going to say yeah, why not? But as a matter of fact, I think I'm going to do 20 contracts, 2,000 shares. All right, 640. Okay, so that may or may not fill tomorrow morning. We will find out tomorrow morning. It is what it is. All right, that being said, what else do we got? We got like 15 minutes to go. I got 99 messages. Holy cow. Can I sell a covered call in units less than 100 shares? No, you cannot. Sorry. Can we look at Ford? We just looked at Ford. Thanks. Wave Runner, James, can you please buy the stock and sell the covered call in one order? Yeah, we already did it a couple times. Hey, got this message. This account can only place closing transactions only. What does that mean? That means you either sold too many or you have a margin call, one or the other. You're not allowed to buy anything. You have no buying power. I'm new at this. Obi, keep coming back, keep learning. I'm here every single night. How about Jack? I have no idea who Jack is. No, I have plenty. All right. 86. Correct. He just went over a few more inexpensive companies. Yes, I did. I have no money in the account. Yep. Thank you. Obi. Yep. Thoughts of Eli Lilly. Eli Lilly's out of my price range. Terribly sorry. It's a nice company if you have the kind of money. Do I ever sell puts? Yes, I do, but I don't go over here. Here, I want to keep simple, safe, and predictable. Once you get that, all right, there are a lot of things you can add. You can add calendar spreads. You can add spreads. You can add back ratios. You can add diagonals. You can add straddles and strangles. A lot of things you can add to this. But at first, at least, find a trading strategy that's simple and easy and is profitable. Come on, come on. Okay, so as I was saying, okay, this trading strategy here that I'm teaching you now, I consider it as a stepping stone. If you're going to jump into this little world of trading in the stock market, why not do it something that's simple, safe, easy, predictable, all that kind of nice, neat stuff. And if you do it right, you make 50% per year, 1% a week. Okay, once you get that perfected, yeah, then throw in some puts, then throw in some straddles and some strangles. Okay, they have more risk, they take more time to understand them. So you're trading your time for money. So make sure when you trade your time for money, you're doing it from a place of more power, so to speak. Okay, so if you're making 50%, we're using this simple strategy here, great, fine, jump onto something else that's a little bit more complicated. Now, when I say I created it for a 9-year-old, it had to be simple and it had to be safe. Predictable, consistent, all of those. And then number 5, no way that she could lose. Remember, my daughter was 9 when I taught her how to do this. Okay, never buy something you don't want to hold long term. Never sell at a loss. Make sure there's plenty of increased dividends. Make sure the company is consistently profitable. I like 20 years. 20 years, there's over 300 companies that have 20 years of increased dividends. Weekly options, I want to get paid every single week. I don't want any of this monthly bullshit. I don't. I want weekly cash flow. And then make sure the numbers work. What do I mean by the numbers? If I'm buying it here, I'm selling it there, is that more than 1%? Great. That's what I want. 1% or more every single week. All right, let's keep going. But he does others. Yes, I do other stuff. I just don't do it here. Not in this strategy, though. You're correct, Recon. Thank you. What do you think about PayPal? No. I bought 1,500 shares this morning, up 10%. Now, do you think I can break 2? Okay, so Ibrahim, okay, it ain't a profit until you take it. So if you bought 1,500 shares, it's up 10%. Take the profit, don't take the profit. I honestly can't tell you what to do. Okay, but here's the thing. Nobody ever went broke taking profits, and it ain't a profit until you take it. Okay, so if you like PayPal, hold on to it. You don't like PayPal, take the profit and run. I honestly can't tell you what to do. I could, but I'm not going to because I don't know anything about you. And I don't want to give you wrong advice. I think I am. I need to change ASAP. Okay. Obi, no problem. Margin is very risky if your position, yes. Margin is risky. I suggest you don't do that. The chart on Bud, B-U-D, what the hell? What the hell? I don't think I've ever bought Bud. And all right, $60. Bud, 61. Yeah, there you go. That's probably why. Oh, that's tomorrow. Next week, the 61, $1.05. Oh, the 62. Okay, barely 1%. Interesting. Last 30 days. This thing's all over the place. I don't like the choppiness. Okay, look at all the gaps. Okay? Gap down, gap down, gap up, gap up, gap up, gap up, gap up. Well, they're all gap ups. That's pretty cool. Yeah, she's still too high. She looks like she's getting ready to come down. Sorry. I've never done Budweiser. And don't get me wrong, I don't know why, so let's go check. What the hell is this? Oh. B-U-D, Budweiser. When you say Budweiser, you said it all. Okay, May. What do they pay, once a year? Wait a second. Once this year, once last year, once in 22, once in 21, once in 20, twice in 19, twice in 18, twice in 17. Okay, so they were paying twice a year. Now they're only paying once a year. So I'm going to say no to Budweiser because if they're paying once a year, they've already paid it. And they're not going to pay it again for another year. Nah. because you have no idea what happens when the stock goes down. What are you collecting? You're collecting nothing. All right, so no to Budweiser. Sorry. All right. What's next? James, call out those $15 stocks again. I got a pen and paper. Recon, seriously. You look for 30-day bottoms. What's wrong with 30-day bottom? I like 30-day bottoms. I'm sure as shit not going to buy it at a 30-day high. I don't do that thing. You know, you buy it high, wait to go higher. Yeah, no, I don't do that. James, do you spread your trades out with different stocks or load up on what looks best? All right, Wave Runner, you've been here a few times, so you probably know that all my trades are based on the calendar. That's it, the calendar. Okay? Now, why do I base it on the calendar? Because see each one of these little green dots? That represents an EX date. An EX date is the last day the stock trades before the dividend is paid out. Now, there's only two reasons the stock moves. One is a known reason, the second is an unknown reason. What's an unknown reason? Unknown reason is a natural disaster. Hurricane, tornado, typhoon, earthquake. Something that can upset a corporation. Or how about springing a leak, an oil leak in the middle of the Gulf of Mexico like British Petroleum did? Nobody knew that was going to happen. Or how about when Exxon Valdez crashed up in the Northwest? Nobody knew that was going to happen. Certain things happen that you can't plan for. You can only react to. Those are unknown reasons. They make stocks move, an unknown reason. Okay. What is a known reason? Well, we have a whole bunch of them. Okay, we have what's called an earnings report. We know when the earnings reports are coming out. We have dividends. We know when those are coming out. We have cyclical seasonality. What is that? Okay, winter, spring, summer, fall. You cannot honestly tell me that a company runs the exact same in the summer as it does in the winter. Okay, why does Hershey goes up in the first week of February? Well, you get Valentine's Day and then you have Easter right around the corner. Why does White Watches go up in the first of the year? Well, that's self-explanatory, isn't it? Why do gas stocks go up in the right during summer vacation? Well, that's when a lot of people, let's alone a lot of families take vacation and go for a drive. Why do oil stocks go up in March? Well, because you can buy oil on any time during the year, but we all in the north turn our oil heaters on at the same time, October, November, December. October, November, December, January, February. Ooh, what happens in March? Well, you're out of oil. Guess what you got to do? You got to load back up again. We all turn them on at the same time. We all don't fill up at the same time. But come March, we're all empty. So oil stocks go up in March. Certain things happen predictably throughout the year. That is called seasonality. That is a known reason. Me, particularly, I like dividends because they happen every single year. Every 90 days. Most companies pay every 90 days. And if they're consistent and they consistently increase, well, great. I know when the stock is going to have its dividend. So if I like Kinder Morgan on the 31st, I'm going to want to buy it 2 weeks before the dividend date, which is the week of the 15th on a Monday. And then I'll be able to take advantage of getting the premium for this week. If I get my target, great. If I don't get my target, I'll do it again here. If I get my target on Friday, great. If I don't, I'll do it again here. So I'll get a premium, a premium, a premium, a dividend, worst case scenario. And I'll take it into Friday. If I have to take it again, I'll do it again. And then I'll do it again. And I'll keep doing it until it hits my exit target. My exit target is always more than what I paid for it. It makes no sense to sell something for less than you paid for it. It defeats the purpose of the game. All right. ALG 3218. Shall I sell everything? Sell everything except for your wife, dude. Jimmy. Hi, Jimmy. Has no volume on YouTube. Again? Really? Hello, hello. Yes, it does. It's working. Don't. I'd be doing covered calls on everything, and I don't buy any stock unless I do hundreds. Okay. No sound on YouTube. Felix, we already took care of that one. Hey, yo, hey James and everyone. That's Wildcat Sam. Joe, how you doing? Cork. Do you trade options and futures? I don't do futures, but I do options. Wow, Macy's. Oh, I missed a whole bunch of questions. Sorry, guys. We got like 3 minutes left. Go. Think or swim. How much? How? Blah blah blah. Chat. Is this guy related to Michael Burry? No. Ford sell-off. Interesting. Missed quarter earnings. Yep. Up, down 35%. You think it's a reversal? Spider? I don't know, don't care, don't do spiders. Sorry, no predictability to them whatsoever. They don't pay dividends, and if it goes down, you get nothing. So what else we got? How about waste management? All right, Arrow, we can take a look at it tomorrow. We got like 3 minutes left, and I got like a whole bunch of questions I haven't gotten to yet, so I want to get to those questions first before I look at anything else. Is there going to be a reversal in spider? Don't know, don't care. I don't do the spiders. A little bit out of my price range. How do you hedge delta using futures? Ooh, that's a good question. I don't cover that here. Are you going buying and selling every week? Why not just hold the stocks? Oh my God. Archie, did you honestly ask me that question? Okay, I got a question for you, Archie, specifically for you and for only you. You ready? Okay, you tell me what stock I can buy that will give me a 50% or more increase on a yearly basis. And it will allow me to use some of that money on a weekly basis to pay my bills. I have no desire whatsoever to buy and hold anything. Okay? When you get to a certain point in life, okay, which I'm at this moment, all right, you go to your class reunion, you talk to your class buddies, and this person died, that person died, this person died. All of a sudden, everybody you knew, everybody you grew up with is dead or dying. What the hell am I going to put my money into something, wait 5, 10, 15 years to spend it? Hell no. I want cash flow. Only way to get cash flow is from companies that actually pay out dividends, which sharing their profits. Great. Those ones I'm looking for. There's about 300 of them. Plenty for me to choose on a weekly basis. Okay, I buy a good, decent stock. I sell somebody the rights to buy it from me for the exact same amount of money I just paid for it. I collect a 1% premium. That comes to over 50% per year. I have not yet found a company, let alone a couple of dozen companies, that pay 50% per year every single year consistently. Okay, you may find one or two, but then you're cherry picking. You can't, there's 9,598 stocks in the stock market. Name me 5 that's actually going to increase 50% every single year for the next 10 or 15 years. They'll be more than happy to buy something and hold on to it. No, it doesn't work that way. Okay? I buy, I sell, I make a profit. That profit allows me to live comfortably. Without that, I'd have to go back to work. I've been working since I was 13. I'm 60 years old. I have no desire whatsoever to punch a time clock and work for someone less, yeah. No thanks. How about I just go to the next question? Are you only trading options weekly? Yep. I like weekly cash flow. Only way to get weekly cash flow is from something that gives you weekly cash flow. Monthly options don't give you weekly cash flow. Okay? Just don't do it. If you have another way of making weekly cash flow, fine, let me know. This is a list of weekly dividend companies. Yep. Kuchi, did you say 5% for the Ford trade? I believe so. 5.73% for that Ford trade that I just did. But that Ford trade that I just did was on margin. Okay, excuse me. It tasted much better going down. It did. Oh, wow. So that Ford trade, okay, was a margin trade, which means half the money was mine, half of it belonged to my broker. Okay, I like the trade. I like Ford. It's been in business for over 100 years. I have no problem whatsoever buying it. I think, hypothetically, this was just a shot in the dark. I think it's going to bounce tomorrow. but I'm only looking to hold it for a week. And here's the thing. If it fills tomorrow morning, I get that 5.7% right away. Now, I have a debit card and a credit card attached to my trading account. So that 5.7% I just made on Ford on that trade just now automatically goes to my credit card or my debit card, allows me to pay bills. Allie, you want to have a conversation? You want to jump in and talk with the group? Great, wonderful. Send me your phone number. We'll have a conversation first before I invite you on. Okay, because I have no idea who you are. I have no idea what kind of contribution you can make to the crowd. And yes, Kutchi, that was a 5% trade on Ford. Recon, Archie, True, Dividend King, blah, blah, yep. AT&T. Didn't we look at AT&T earlier? All right, I'm not looking at anything else because we're past 11:30. I'm just trying to answer some questions. Very hard to find stocks, good entry points on a weekly basis. CMG, no, it's not. Okay, I've been doing this for over 15 years. Now, 20 years ago, I was doing something totally different. Okay, I came up with this trading strategy when my 9-year-old daughter wanted to learn how to trade. So I had to come up with something that was simple, safe, predictable, consistent, and no way that she can lose. This is what I came up with. It's been working so good, that's all I do. Because I can do 5 or 10 minutes a day, which is less than an hour a week, and make 1%. That 1% is a big fat number. 1 hour a week gives me a big fat number. That's what I'm looking for. Okay, if you have something better, I'm more than happy to take a listen. But I haven't found anything that works better. AT&T does. All right, we'll take a look at AT&T again tomorrow. See, it's very hard to find stocks with a good entry point on a weekly basis. That's not true. I missed a bunch. Sorry. Oh. Rotary girder. Really? I've been big on QYLD for years. That's a big fat lemon, in my opinion. Let me tell you why. Let's go take a look at QYLD. I'll show you why this is a lemon and a half. QYLD. Number one, it's a monthly. So, if I was going to do QYLD, I can only do a covered call once a month. It's at $17.19 at this moment in time. So, if I was going to do the 17, I would collect 30 cents. Now, at 17, okay, it's 17.24. So if I sold the 17s, I'm getting 30 cents. But I'm losing, look at it, I'm losing 24 cents right at the top, which means I'm walking away with 6 cents. 6 cents on a $17 stock. That's not even 0.5%. But it gets worse than that, because that 6 cents, now I have to stretch it out over 22 days. 22 days is 5 weeks. Okay? Is it 5 weeks or 4 weeks? It's 4 weeks. No, because there's 5 trading days per week. All right, so anyway, so it's 4 weeks. So I got to take that less than 0.5%, divide it out through 4 weeks, then I got to figure out where the hell this thing's going to be in 30 days. Yeah, no thanks. But it gets worse. Hold on. If you order now, you get 2 for the price of 1. So we're going to go to QYLD. QYLD. Okay, so here's the dividends for QYLD. Now, we're going to go all the way back 2014. Great. They're paying dividends 2014. Only 10 years. Okay, so let's see how profitable they are. Hypothetically speaking, if they're profitable, their dividends should consistently increase. Okay, it starts out at 26, and it drops to 19. Wait a second, isn't that going the wrong way? 19, 26, oh, and it drops again. It goes from 26 to 25 to 21 to 22 to 20 to 24 to 14 to 23 to 16. What the hell are you thinking? This is going the wrong way. There's no consistency in this whatsoever. But it gets worse. Okay, 15, 17, 20, 22, 18, 22, 16, 17, 20, 14, 13. Yeah, give me a freaking break. 15, 13, 10, 12, all over the freaking place. No consistency whatsoever. But wait, it gets worse. Okay, we're going to check out the summary for QYLD. Take a look. Now, if you've been paying attention, okay, if you've been paying attention, I like a safe, predictable, consistent 1% per week. Now, you may or may not have excelled in math, but 1% a week comes to over 50% a year. What do you get in QYLD? You're getting 11.6% for the year. Are the dividends consistent? No. Are they continuously going up? No. Are you getting a decent return? No. QYLD, in my humble opinion, is for those people who don't want to take advantage, don't want to take control of the money and say, hey, I don't want to do it, you do it, give me what you think. Yeah, no thanks. QYLD is a big freaking lemon in my opinion. What the hell are you thinking? I had to use that once tonight. Alrighty. Come on. I can maybe shoot one more video before the night's over. All right. So that's my humble opinion on QYLD. Okay, QYLD, VVO, VOO, SCHLD, JEPI. There's a whole bunch of them. All same pieces of crap. They pay you a monthly dividend. The monthly dividends aren't consistent. They don't consistently go up, which means if they're not going up, that means they're not profitable. Okay? They're just barely treading water. They give you less. Okay, so they give you 20 cents this week per share. Next month they give you 14. Next month they give you 10. Next month after that they give you 23. There's no consistency whatsoever. Sorry, I just don't like QYLD. There's a lot of them like that I don't like. How many different stocks do you hold at one time? Well, I have 6 different accounts. So I have one account that has 4. I have one account that has 6. I have another account that has only 24. Totally different strategies though. This is the only strategy that I share publicly, and I share 2 accounts. One is a margin account, one is a cash account. So it gives you an idea what the difference is between the two. Now, I do not suggest you do a margin account until you understand the risks and rewards that go along with it, because you're borrowing money from someone and you have to pay that back. If the stock goes down, you lose your money, they don't lose theirs. Leave me a hay and other stocks you know of. All right. You did it now. Thanks, Michael. Don't get me wrong. I mean, if you think about it, there's some stuff that's good and some stuff is just crap. I mean, seriously, if you're going to invest your money and you do not look at what the history is or what they're paying, well, it's your own damn fault. If you're looking at a company and you see that the dividends aren't consistent and they aren't consistently going up, well, what do you think that means? Okay, if you're continuously profitable, well, you share your profits. Great, you share your profits, well, the profits should get higher and higher. If the profits aren't getting higher and higher, they're not doing their job properly. All right. I don't do spiders, so I really couldn't tell you. So you buy and sell every week. I'm confused how you get this 1%. Archie, let me go over this one more time. Let's see if you can grab it, because it's really not that difficult. It was created for a 9-year-old little girl. So we're looking at Macy's. Macy's, quickly, the ask, which is the price that I can buy it for tomorrow morning. It is right up there. You see it? $16.52. Okay? Now, to get a weekly 1%, I look for a decent company. I like Macy's. They've been in business for over 100 years. I got no problem whatsoever holding on to them. Okay, that's number one. Make sure it's a good company. Never buy something you do not want to hold. Okay, simple. Never buy something you don't want to hold long term, because you just might have to. Now, the longest I've ever held anything was 9 months. Okay, I bought it, it went down, floated around the bottom a little bit, it came back up, I got out, and I still made a profit off of it. Number one, never buy something you don't want to hold long term. Number two, never sell at a loss. Okay, Macy's, I got no problem with Macy's whatsoever. Macy's $16.52. If I buy it at $16.52, sell somebody the right through what is called a covered call, one of the safest trading strategies there is. If I'm buying it at $16.52 and I'm selling it at $16.50, I'm making 36 cents per share. Do I really care about the stock? No, I do not. Am I willing to hold on to it if I have to? Yeah, if I have to. I don't want to, but if I have to, I will. But here's the thing. Buying it for $16.52, I'm selling somebody the rights to buy it from me for $16.50. I'm losing 2 cents right off the top. Okay, 2 cents. We take 2 cents off the premium. So instead of taking 36 cents in, I'm only bringing in 34. Okay, great. What is 34 cents? Not a whole hell of a lot now, is it? Don't be so quick to judge. Hold on a second. So, if I'm making 34 cents a share, right? And it's costing me $16.50 to buy it. Why not $16.52? Well, I already subtracted the 2 cents off the premium. The 2 cents I'm losing. So there's no sense adding it twice. Okay? No sense subtracting it twice. So I take the 34 cents, which is my profit per share. So 100 shares is $34. 200 shares it's 68. Okay? 400 shares it's 136, something like that. Anyway, I divide it by the purchase price, $16.50, and it comes to a grand total of 2.06% for the week, because this option here expires on the 2nd of August. Okay, each one of these options expires every 7 days. So you have the 26th of August, that expires tomorrow. There's really no money in one day. But next week, the 2nd of August, well, that's 8 days away. The 9th of August, that's 15 days away. That's 2 weeks away. The 16th of August, well, that's 3 weeks away. Excuse me. So, again, if I'm buying it first thing tomorrow morning, $16.52, selling somebody the rights through a covered call using a call option. Okay, it gives someone the right, not the obligation, to buy it from me anytime they want between when they pay for it and I collect the premium and the time it expires. This one in particular expires the 2nd of August, next Friday at 4 p.m. Now, options expire on Saturday, but you can't trade on a Saturday, so ultimately it's 4 p.m. on a Friday. So we have a trading group that meets every morning, Monday, Tuesday, Wednesday, Thursday at 9 a.m. We take a look at all the current trades that are currently available. We buy them, and then on Friday at 3 p.m. we jump on to see where they are. Do we have to do anything? Do we have to buy anything? Do we let it expire? What's going on? We take a look at the numbers on Friday afternoon, because we buy on Monday, we collect all our premiums, because that's when the premium's the highest, on a Monday or a Tuesday, and then we take a look Tuesday, Wednesday, Thursday, just to see where they are, to balance them out. We talk about them here too, so we always know what's going on with the stocks we have in our what do you call it, in our portfolio. So that being said, safe, predictable, consistent, 1% per week. How do I get it? Right there, Macy's, $16.52. I sell the 16.50s. I collect 36 cents. That 36 cents is 2% of the purchase price if I like Macy's. And I do. I actually bought some Macy's. Okay? So that's the question. Do I like Macy's? Do I like it at this price? Well, they've been in business for over 100 years. Why wouldn't I? So hopefully that answers your question. Which Ford calls did you buy? All right, Bobby, I didn't buy the calls. You weren't paying attention. Okay? Now, just to let you know, Bobby, if you really want to know, okay, this chart behind me is live on YouTube. What does that mean? That means that this whole session, this whole evening, is fully recorded on YouTube. You can watch the whole thing from 9 o'clock all the way until we finish on YouTube. Okay? You can see every single live show that I have done since the beginning of January on my YouTube channel. All right? So if you really want to find out what that trade was on Ford, I think it was a 5% trade. Okay? It was right there. I went over the numbers. How many different stocks do you hold? Too many per account, blah, blah, blah. So you buy and sell every week. Yep. How do you get to 1%? Already went over that. Which phone call I did. Okay, that's already there. Thoughts on tomorrow. Sam, we'll find that out tomorrow. SPY, nope. SPY tomorrow, nope. Man hates QYLD so much. Well, John, think about it seriously. Seriously think about it. Honestly. QYLD is giving 11%. Okay, great. If you don't really care about your money, fine. Put it there. I don't ever tell people what to do. I sure as shit wouldn't do it. I get a safe, predictable, consistent 1% every week. Why would I settle for 11% per year? Seriously. I mean, it's like, never mind. I'm not even going to acknowledge that. QYLD is for income. Seriously, dude? You put your money there and it gives you 11%. Okay, great. Apparently, all right, I'm not even going to get, don't even get me started. 10, 12, but wait, it gets, yes, it does. Bobby, if you want me to take a look at Maxon tomorrow, it is what it is. Smoking chicken and fish, yeah. All right, just joining. How do you find covered calls you want to sell on a stock you want to keep? James, I'm going to let you know I'm here every night, 9 p.m. to 11:30. I'm past my time. I'm about to turn into a pumpkin. I'm going to get off of here and get some rest. That chicken quesadilla was yummy, but I probably shouldn't have eaten it. Joseph, if you really want me to take a look at ASTS, we'll take a look at it tomorrow. The list of dividend stocks and looks each time to pay the dividend, blah, blah, blah. What if nobody buys it for more? Doesn't work that way, Charlie. If it is listed here, if the market maker has it listed, it is his job to fill it at the price he has listed. Okay? It's not as if he says, no, I don't feel like listing. No, 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 no. If he posts it, he has to fill it. That's at the market price. Limit order, totally different story. He doesn't have to fill it if he doesn't want to. All right, Bobby Z, STS is on the top 10 long hold list. Yeah, we'll check that one out tomorrow if you got the guts to show up, Bobby, because I've never heard of it. If I've never heard of it, it's going to be a definite no for me. What monthly fee is it for the trading group? It's $100 a month. CMG's only website, I think it's $100. Yep. Mara, we'll take a look at Mara tomorrow. Sleep time. Yep, you got that right. Website. The website is the 10-minute trader. It should be right here. Where is it? The 10-minute trader. Okay. Now, I've had the 10-minute trader. If you actually look up the10minutetrader.com, you will see that I've owned it for over 20 years. Okay, I have been here for quite a while. Now, I'm only new on what we call it TikTok, because someone was stupid enough to show me how to use it. What about Siri? I love Siri. We can take a look at Siri tomorrow. I see Mara tomorrow. Wicked reward, 5%. Really? For Mara? Chris Martin, $11.54 to 16 cents. Okay. Mara to 21. Well, let's see, Mara. M-A-R-A. Yeah, I'm gonna pause on Mara. It's still going down until it finds the bottom. There's no sense even looking at it. Sorry. Chris Martin, not 5%. Well, let me see. All right, so Chris Martin, you really want to challenge my math skills. All right, here we go. Here's the trade right here, sitting up, waiting to be filled tomorrow morning. All right, so let's go over a little bit of creative math, Chris. All right, what I'm going to do, I'm going to come over here to the very far left, and I'm going to do a duplicate trade. Create a duplicate order. Wonderful. There it is, a duplicate order. 20 contracts, 2,000 shares at the limit order. So here we go. Are you ready for this? Are you ready for this, Chris? You ready? Here's the order right here. Going to buy 20 covered Ford 100s. Those are the weeklies. 26 July 24. That's next Friday. The 11.5 call option on Ford at 11.18. Limit order 2 open. Wonderful. Okay, my break even, 11.18. Maximum profit, $640. Let's whip out the calculator. Calculator, $640. Great, there it is. That's my profit, $640. What is it costing me to do this trade? This trade is 11,153. 11,153. Oops. Oops. I hit the wrong button. I got to do it all over again. It happens. See, this is why I have a practice account, because every once in a while I hit the wrong button. 640, my max profit. See over there, 640, maximum profit. What does it cost me for the trade? $11,153. Hit the equal signs, and it is, tra-la-la, you ready? 5.738%. 5.738%. Your math is wrong somehow. Chris, okay, 4.7. No, your math is wrong. 5.73. Now, this is a margin account. Huge difference. Yeah, I get it. I get what you're saying. Okay, the numbers are right there. All right, so get out of there. Let's get out of there. Let's go right. Okay, right there. You're looking at single. All right, single. There's the premiums. The 11s is going for 35 cents. The 1150s are going for 15 cents. Okay, fine. Now, I want to do a covered call. So I'm going to change it to a covered call where the stock and the options are tied together. I like the 1150s. 1150s right down here. I click on this. Boom. There you go. All right. 10 contracts. Blah, blah, blah. There you go. There's my profit, 430. Do my profit. Gotta clear this. 430 divided by what is it costing me? $5,466. Boom, there you go, 7.8% return. Okay, that one's 7.8%. The other one was 5.7. Take your pick. Which one do you want? Okay, Chris. Okay, I just showed you twice. All right? Is that trading view? I have no idea what that means. Trading view. I just showed you what the trade was. Buy 10 covered forward 100s. Those are the weeklies. Okay, 2 August 24. That's next Friday. Okay, the $11.50 call option along with the forward stock at 11:07. Limit order to open. Okay, the break even 107. Maximum profit on this particular trade $430. What is it costing me? Well, if it was all cash, it would be $11,070. A margin account, $5,466. This happens to be a margin account. Okay? Those are the numbers. August 24 is 3 weeks out. No. 2 August 24. The 2nd of August 2024. See? 2 August 24, the 2nd of August 2024, not the 24th of August. Okay, 2024, that's where the 24 comes in. 2 August 2024, that's next Friday. Okay, why would I do 4 weeks away? Just doesn't, 3 weeks out, just doesn't make sense to me. Okay, 1 week, it's tomorrow, not enough money there. Next Friday, yeah, fine, 8 days. Okay, those are the numbers. Okay, the numbers are right there, automatically fills. Okay, my break even, my maximum profit, what's it costing me, all cash, what's it costing me in margin. Okay, I just so happen to have a margin account. I have a cash account and I have a margin account. Now, if it was all cash, let's change that, get this out of here. $430 divided by 11,070. An all cash account, it would be 3.88%, just a smidge under 4%. How can you go wrong? It's a Ford Motor Company. They've been around for 100 years. Why am I continuing doing this? It's almost midnight. You guys have a great day. I'll see you again tomorrow. So, not worried about the 35% loss and $5 billion a year? Obama, oh my God, really? Ford has been around since the 1900s. They've seen World War I, World War II, Korea, Vietnam. They've seen the stock market crash. They've seen the Dust Bowl, the Great Depression. They've seen the oil embargo. They've seen, what do you call it? the COVID crap, Y2K, all the wars in the Gulf, and yet they're still increasing their dividends, and they're still in business, and they didn't take any bailout money from the government. I don't see them going out of business. Do I worry about that? No, I don't. Terribly sorry. I like Ford. I don't think they're going anywhere. But it is what it is. You buy what you think is right for you. I will buy what I think is right for me. I don't give people advice. I just tell people what I do. Now, you just saw me do a trade on Ford. Well, that probably means that I like Ford and I'm okay with it. No, it has nothing to do with politics whatsoever. Okay? It's, I like Ford. They've been around for over 100 years. I like General Motors. They have great premiums. Okay? The Ford Motor Car Company book value is 14 bucks. The stock is 11. How the hell could you go wrong? In my humble opinion. And remember, it's just my humble opinion. It's not advice. I don't give any advice. I'm just saying, I like Ford. I'm going to buy Ford, and you just saw me put in an order for 2,000 shares of Ford for tomorrow morning. If it feels great. If it don't feel, big deal. I'll go on to something else. I really honestly don't care. Ford is just 1 out of 300. They didn't lose a bundle on EVs. Well, of course they did. Because the stupid administration says, hey, we want electric cars. They didn't ask the public. Okay, didn't Ford learn a lesson with the Edsel? Well, we think the public's going to like this. Fuck no, we didn't like that crap. We don't like gas. We don't like electric cars either. I personally like to get in, turn the key, and I want to feel the rumble of that motor. Terribly sorry. I'm not that keen on electric cars. Are you giving me stock picks for the $100 a month? Okay, CMG, I don't give stock picks. I just give the stocks that I like. Okay? I show you what I like. All right? When I show you what I like, it is up to you to do the research. When I say I like Ford because it's been in business for over 100 years. I like Ford because the book value is $14.78 and the current stock price is only $11.23. I also like Ford with that big ass drop they just had. There's going to be people jumping onto that tomorrow. Okay? I like it. That's it. You don't have to like it if you don't like. Now, I have 300 stocks in my portfolio. Every week, I send you, as a member, I send you a list of what I'm looking at. You have your choice to take a look at what stocks I'm looking at. So when I say, hold on a second. Let's go here. Let's go. Oops. How about we get out of here altogether and we go to some place that we actually like. Okay, now, when I'm looking at this list here, okay, take a look at this list and you ask me first a question. Bank of America, General Motors, Occidental Petroleum, Coca-Cola, Paramount, Boyd Gaming, Hewlett-Packard, Heinz Ketchup, Mondelez, U.S. Bank. Okay, which one of those don't you like? That's Warren Buffett's list. I never, ever, ever question Warren Buffett's list. If it's good enough for Warren, it's good enough for me. Is he recommending it to me? No, he's not. Please give easy access to get in touch with you. Okay, right here. Go to top left. You see where my little pretty little face is there on the top left? It says dividend investing for weekly cash flow. If you click on that, they'll give you to a little envelope will allow you to send me an email. Okay, send me your phone number. I'll give you a call. I love talking to people. Really do. I especially love talking to people about a subject I'm passionate about. I don't know if you noticed, I'm a little passionate about this subject. I think everybody should take responsibility for their own money and to invest it safely, predictably, and consistently. Okay? We little guys have been screwed over long enough by the big guys and the big banks and whatnot. Of course we're going to get screwed. No matter what happens, no matter who sits in that big chair in the Oval Office, we're going to get screwed. We always do. Okay? I'm helping out the little guy make a safe, predictable, consistent 1% per week. That's over 50% per year. If you can get your money in order and you can make 50% per year, well, hypothetically speaking, the rest of your finances should fall into place. Anyway, all that being said, we're past midnight. I'm definitely going to turn into a pumpkin. You guys have a great day, and we'll see you again tomorrow.